Hello, everyone. I hope all of you are doing great today. And this is a huge opportunity for all of us to create a success story for the AAA exam in June 2022 attempt. So, here is a very, very warm welcome from my side. My name is Ahmed, and I am going to be your tutor for the next 4 days. And I will try my level best to make sure that this extraordinary pressure on the students when it comes to this AAA exam is somehow lowered down. So we'll try to figure out a methodology through which we can, figure out a relatively easier way to pass this particular paper, because the AAA is a nightmare for majority of us, and the reasons are very much obvious, that students tend to idealize such ideal answers that they end up scoring nothing or below average marks. So if a student has got the potential to score 55 or 60, but that student idealizes a past paper or a script which is above 75 or 80, and as a result what happens, that he or she ends up scoring 45 or even sometimes 35. So let's try to figure out an easy way. Let's try to calm the things down, and let's try to explore the easier marks, and let's try to stay optimistic. So my agenda for the next 4 days would be to make you realize that this is not that difficult. I'm not saying it's a walk in the park, but I would like to make you realize, and I want to highlight over the period of next 4 days, that this is not that difficult. There are certain easy things. You don't have to idealize an ideal past paper answer. You can skim your way. You can extract an easy portion out of a past paper answer. So in the next 4 days, I will not only try to express my answers, express my point of views, but also I would like you to realize that the and we can somehow extract a proportion out of it, and we can bang in the full marks. We can score full marks by extracting certain portions out of the past paper. So that's the real agenda I have, and that was communicated to me, that I need to come up with an easier approach rather than making you realize that this is an ideal answer which you should be replicating. No, I've been asked and I've been requested to come up with an easy approach which will which might not be able to ensure 80 marks or 75 marks, but that will definitely push you from 40 to 60, from 50 to 55. So easy approach, easy way. And trust me, if you are going to follow easy approach, and if you are going to attempt the complete paper with an easy approach, with a simple approach, you can score, you can be a position holder. Why not? Okay, so here I am. My name is Ahmed, and my WhatsApp number is right now in front of your screen. You can always contact me um, uh, in this point of time, in these 4 days, or even after that. So no worries. Let's kick in. Uh, okay. Uh, Something about me, a very brief introduction about me. I am currently teaching at School of Business and Management, which is a platinum based college in Islamabad. It's a 15 years old college. Moreover, I'm also teaching AA, which is Audit and Assurance, specifically in English language at Wi-Fi, which is again an approved tuition provider. Wi-Fi is a gold online ALP. I'm also associated with SEMA and CMA. Moreover, my core subjects are management accounting and performance management, and audit and assurance, and the AAA, the advanced audit and assurance. In the recent past, I had 4 distinctions in PM, in AA, in AAA, and then in AA. So that was a bit of a description about me. Okay, let's straight away jump into the exam format. What's the exam format? So we have got two sections, section A and section B. In the section A, we have got one question with 50 marks, and along with those 50 marks there will be 4 professional marks, and in the today's class we'll also be discussing those professional marks. So out of those 50 marks there are 4 professional marks, so overall the exam requirement will be for 46 marks. Okay, what about section B? In the section B we'll have 2 questions, 25 marks each, question 2 and question 3, so that makes 100 marks. Okay, now very important, course content. Overall, as per the examiner, as per the study guide, we have got 7 areas in total. Now, out of those 7 areas, the number 1 area, which is called regulatory environment, we won't be able to discuss this part A in the in the upcoming days in this webinar, regulatory environment, but I would like to highlight that you as a student should prepare couple of things from regulatory environment, especially one thing, and that is money laundering. So out of this regulatory environment, note it down somewhere, you got to prepare a topic called money laundering by yourself after the, at the end of the webinar, maybe on the coming weekend. So that's your part A, or your course content A. Now let's straight away jump into the course content G, current issues and development. The current issues and developments are only tested by the AAA examiner once there is a recent article about a current issue or a recent development. So watch out for a recent article. Watch out in the next 15 to 20 days. Maybe student accountant or maybe the ACCA website will come up with a new, issue or a new article. So you have to watch out for this. So for now, in the next 4 days, we won't be able to discuss much on A and we won't be able to discuss much on G, but we will be focusing on B, C, D, E, and F areas of the syllabus. The syllabus area B is about professional and ethical considerations. The C is quality control and practice management, including tendering, advertising, and so on. The section D is about planning and risk assessment with respect to historical financial statements. The E is called completion, review, and reporting. And F is a very, very tricky area, which is called other assignments, and we'll have the complete 4th day allocated to this topic called other assignments. So for the next 4 days, including today, we'll be focusing on B, C, D, E, and F. As far as A and G are concerned, you got to prepare money laundering from the A, and you got to you have to keep an eye on the ACCA website for the current issues and development in the last 15 to 20 days, which are up in our sleeves. Okay, let's talk about the pass rates, especially the recent pass rates of AAA. And unfortunately, the story remains the same. The pass rates of AAA are very, very, very disappointing. March 21, 32%, then June 21, again 32%, then September 21, it was a nice friendly jump of 2%, 34%, and December 21 again 34%, but now it's going back. The March 22 attempt, the most recent attempt, it was 33%. So you could say that on an average it's around 32, 33%, which is not that great. Why is that? Why students fail in AAA? Why students fail so much? Why the failure rate is so high? It's, when it comes to failure rate, AAA is right on top of all the ACCA exams. So why students fail in AAA exam? The next 5 to 10 minutes, this particular slide is the real game changer. You got to understand, if you will be able to understand why students fail, and if you could, make some, adjustments in your preparation, adjustments in your, methodologies, adjustments in your mindset, as a result, you will be able to shine on Monday, 6 June 2022. So why students fail this exam so much? There has to be some extremely important reasons. The number one reason why AAA has got such a poor pass result, and according to the examiner, the 90% of the students who fail the exam, they never exceed 90%. In fact, greater majority do not even exceed 80%. So if somebody is going to score 47, 48 by attempting the paper of 78 marks, 82 marks, 48 out of 80 marks, 48 out of 82 marks, what do you think? Are we going to appreciate that student that, come on, that's great, you scored 48 by just attempting 80 marks paper? No, not really. You should have attempted 100-mark paper and you should have scored 50 or more. 48 out of 80 is not an achievement. So poor time management is the biggest of all, the greatest reason, the most significant reason, according to the examiner's report, according to the trainings we have attended with the examiner or the marking team or the articles, any content available regarding the AAA failure rate. It's the poor time management. Students are going to start with question number 1, which is a 50-mark question, and they will end up finishing the question number 1 once 2 hours and 15 minutes or maybe 20 minutes are gone. In fact, their last part will still be, somewhere hanging. So as a result, they will attempt one out of the 2 questions we have in section B, and as a result they will only attempt 75 or 80 mark paper, and they won't be able to pass this paper. They will flunk it at 47, 48, 49 by attempting 80, 82 marks paper. So why students fail in AAA? Number 1, poor time management. And when I say poor time management, it has got to do with 2 things. Number 1, students are not having an ideal typing speed. So you got to work on your typing speed from today, from tonight. Why students are having time management issues? Because they do not practice with the exam pressure. So lack of exam practice on the ACCA practice platform. So from tonight and onwards, whatever you are going to type and learn, whatever you are going to practice, you must ensure that you are religiously typing everything, attempting everything on the ACCA exam practice platform. Do not attempt anything on any other platform. Just focus on the ACCA practice platform. So by working on your typing speed, by typing the questions, students are going to read the question, they are going to read the solution, and they are going to say, yeah, all is well, everything is fine, I know the answer, I can make myself understand, yeah, that's the point, yeah, that's the risk. No, you got to type your answers, and you got to type them on the ACCA practice platform. If you are going to follow this instruction, the failure rate, especially with respect to you, will fall. You might be able to attempt 100 mark paper rather than 80 mark paper by just following this technique. So promise yourself that you are going to type every question from tonight onwards. You are not simply going to read it. Quality matters, not the quantity. So you are going to type it, and you are going to type it on the ACCA exam practice platform. Okay, why students fail in AAA? As I told you earlier, the next 10 minutes are the most crucial 10 minutes of the entire series of webinar. And the second reason is called marking scheme. Now, what do I mean by marking scheme? A majority of the failure student are not having crystal clear idea that what is the marking scheme for the risk of material misstatement, what is the marking scheme for the business risk, what is the marking scheme for an ethical and professional issue or a quality control based issue. They are not familiar how much marks they are going to get. I don't know why, but majority students are driving their knowledge and driving their concepts or knowledge regarding the marking scheme from AA. When it comes to AA, one audit risk, or for that matter, one risk of material misstatement was having 1 mark. But when it comes to AAA, the marking scheme is a lot different. Sometimes the marks are 2, sometimes the marks are 3, and sometimes even more than that. So as a result, by utilizing materiality, you can even exceed your marks. So the marking scheme is a very challenging area of the AAA. It's not a mission impossible. We'll make it easy. We'll explore the marking scheme on a daily basis. So today, if I'm going to discuss a topic called business risk, or for that matter, risk of material misstatement, I will ensure that at the end of the today's session, all of you are clear with respect to marking scheme. Tomorrow we are going to discuss quality control or ethical and professional issues. I will try to make sure that all of you are crystal clear with respect to marking scheme. Whenever you are going to type and learn a question on the ACCA practice platform, before starting the question or even after finishing off the question, go on and read the marking scheme. Read the marking scheme available at the end of the past paper, at the end of the exam kit, at the end of the course, each question. So marking scheme is a very, very critical area. Why students fail this exam so much? Because for, let's say, 8 marks, you had to write, let's say, 4 business risk, 2 marks each. A student will be able to figure out 8 business risk out of the question, and that student is going to unfortunately attempt all 8 or maybe 7. What's the benefit of that? Nothing. If you are going to attempt 7 business risk, 2 marks each, that makes 7 twos are 14. Marker or examiner is not going to give you 14 marks. The maximum marks were 18. So why are you going to attempt more than the required or more than the maximum marks? So the marking scheme is really important when it comes to AAA. Number third reason why students fail this exam. So let's imagine I am an ordinary average student. So I read a question after understanding the relevant concepts. So I read a question, I explored a question, I designed few answers in my mind. Then I sneaked in and I checked out the past paper solution. When I checked out the past paper solution, I was blown away. I was like feeling guilty or something. I thought that it's not practically possible for me to reproduce this answer in the next 3 months, or maybe not even in the next 6 months. As a result, what happens? I do not open the past paper answers anymore. So as a result, I just ignore the past paper answer, and somehow I create a belief for myself that I will be able to reproduce answers in my own words. That's not going to work out. Okay, another story for another question. I opened up the past paper, I explored the question, and then I went on to the past paper answer, and I realized the examiner has written a very, very immaculate and a very perfect answer. Now I'm trying to learn that answer 10 out of 10. I'm trying to explore each and every sentence, and I'm trying to replicate everything just like the examiner, which is not a doable task either. So there are two types of students who, number one, are going to idealize the past paper answer, and they are trying to match that, and that is not a workable methodology. You won't be able to reproduce the answers the way examiner has reproduced them. The examiner's answers are super ideal answers. They are for the sake of inspiration. You cannot replicate them. So if you're going to 100% follow the past paper answers, you won't be able to make it. As a result, you will feel demoralized. As a result, you won't be able to attempt the full paper. And if you're going to ignore the past paper answer altogether because you seem to be lost, you seem to be demoralized, that's not a perfect strategy either. So idealizing the ideal answers or getting extremely disappointed or demotivated by looking at the ideal answers, the both options are not correct. What we are going to do, or what I'm going to recommend, yes, we'll look into the past paper answers and we'll extract a proportion out of it. We'll extract a reasonable proportion out of it. We won't rely on our own wording. Yes, we'll look into the past paper answer and we'll drive a reasonable sentence just to make sure we get good enough marks to get the maximum marks. We are not supposed to get 110 out of 100. See, easy. Calm the things down. So we are going to extract the past paper answer, and we are going to extract an attainable standard out of that ideal standard, out of that ideal answer. How does that sound? We'll do it. Okay, why students fail this exam so much? A very common reason which I have experienced, I've inquired, I came across, I asked few students, what happened, what went wrong during your exam? And what went wrong during the exam? That they ignored B and F. Now what's B and F? Everybody seems to prepare the audit risk, the business risk, the planning area, because the question number one is mainly focused on that. Everybody seems to prepare the syllabus area E, which is about completion, review, and reporting, because one of the question in the section B will be from completion, review, and reporting. So as a student, now I'm again average student. As a student, I know I'll be getting the question number 1 on planning risk, so I'm preparing that. Now as a student, I know that I'm getting a question out of the 2 questions in section B in completion, review, and reporting, so everybody is preparing that. Now my question is, what about question 3? According to the examiner, the question number 3 could be from any area of the syllabus. Now when I say any area of the syllabus, I'm sure that last question cannot be from the planning, and it cannot be from completion, review, and reporting, because those 2 things have already been tested in the question number 1 and one of the question of the section B. So what about the question 3 or the question 2? Question 2 and 3 could be swapped. The question 2 could be on completion, review, and reporting, or question 3 could be on completion, review, and reporting. So what about the other question of the section B? The other question on the section B is most likely from ethical and professional issues or other assignments or the audit related services. So majority students, they tend to ignore what? They tend to ignore professional and ethical considerations, which is the course content B, and they tend to ignore other assignments, which are 6 in total. When it comes to our syllabus, there are 6 audit related services, or we call it other assignments in the syllabus. Now why students ignore section B or F? Let me explain you why. When it comes to section B, the majority students have got a wrong belief that they prepared ethical issues in the AA, so they will be able to make it in the AAA. That's a wrong belief. So you have to prepare, you have to type and learn 4 to 5 questions on ethical, professional, and ethical considerations, just to make sure you do not ignore B. What about F? All over the world, all over the continent, the students tend to ignore the topic F, because this topic F is not a single topic. There are 6 other assignments, such as review of interim financial information, due diligence, forensic audit, prospective financial information, social and environmental information, public sector, public performance information. So there are 6 topics in total. So at the end of the session, when the exam is around the corner, when the mock exam is around the corner, when the webinars is around the corner, the student tend to be focusing and they tend to get serious for their studies, and as a result they tend to prepare professional, quality, planning, completion, and there is hardly any time for students to finish off other assignments, and as a result they tend to make compromise. Sometimes a student is not going to prepare other assignments at all. As a result, 15 to 20 marks paper will be left out, or sometimes they will skim those topics and they won't be able to give the due quality which they, which they allocated to the planning, which they allocated to the completion, review, and reporting. So as a result of these compromises on B, section B and section F, the students tend to fail this exam. So let's go back. Why students fail in AAA? Time management, marking scheme, idealizing the ideal answers, ignoring the syllabus area B and F, which you should not be doing. Okay, another important reason why students fail in the AAA, you have to make sure that you finish off your preparation around 26th, 27th of May. You got to attempt one mock exam around 29 or maybe 30th of May by all means. And then you have to make sure that your mock exam is marked by an expert tutor. Once you will receive the feedback regarding your mock exam around 29th or 30th, you have to attempt on 28th so that you could get the feedback in a couple of days, maybe on 30 or 31st. You will, rectify your mistakes. You will work on your mistakes. You will work on your weak areas, and then you have to attempt another mock on 3rd or maybe on 4th of June, at least 2-3 days before the final exam. These 2 mock exams, along with the feedback, especially the first mock exam, along with the commentary from the marker, from the tutor who is going to mark your mock exam, this is going to make you jump not from 40 to 50, but I bet on it from 40 to 60. So you need to attempt at least 2 mock exams. You need to make sure at least out of those 2 mock exam, at least the first mock exam should be marked by an expert tutor. So because majority students of AAA are involved in self study, they are not having proper coaching or teach proper lectures. There is sometimes unavailability of the tutors, and that is why they do not attempt the mock exam and they do not get the feedback on their mock exam. So I am humbly requesting you, please make sure you attempt the mock exam and make sure your tutor marks your mock exam, at least the first mock exam. Okay, now what's my plan for the day 1 and day 2, day 3, day 4? So on the day 1, we will be exploring the syllabus area D, which is planning and conducting an audit of historical financial information, which is basically risk, all kinds of risk, audit risk, business risk, risk of material misstatement, detection risk, all the components of risk. So we'll be exploring risk, and definitely I won't be straight away jumping into the past paper question. No, I will start from the scratch. I'll make you understand what's risk, what's business risk, what's audit risk, what are the different marking schemes, what are the variations in the marking scheme. Once you are fully ready, once your concepts are clear in the 15 minutes or in the next 30 minutes, then we'll jump into a past paper question. Okay, let's explore what's the plan for the day 2, day 3, and day 4 will be. Day 2 will be about professional and ethical considerations, which is one area which students tend to ignore. And we'll also explore quality control and practice management, specifically quality control, which is the examiner's most favorite topic in the recent diets. Examiner is coming up with a 15-mark question on a very regular basis, which incorporates or amalgamates professional ethical considerations along with quality control. So we'll be exploring 15 to 20 marks on day 2. We'll be exploring 30-35 marks on day 1. Day 3 will be on 25 mark, which is one of the question in the section B. Most likely it is going to be question 2. It could be any question 2 or question 3, most likely question 2 of your final exam, and that will be about completion, review, and reporting. So the day 3 will be allocated to another 25 mark of the final exam. The last day, which is the day 4 of this ACCA's practice to pass webinars, the day 4 will be on the syllabus area F. So I told you earlier, you're not going to ignore your BF, your best friend. So you're not going to ignore your other assignments. There are 6 other assignments, and I'll try to make sure that we cover maximum. I'll try to make sure we cover all 6, but I might not be able to cover all 6 in equal detail. So I might come up with 3 in extraordinary detail and 3 in relatively less detail, and so somehow we'll cover all of them. So that's my plan for these 4 days. Okay, one last thing. What should be your plan of action after the webinars? Like, you are going to attend this, these 4 days with me, Monday through Thursday. But what are you going to do once you are done with the webinar? You got to prepare. Once you are done with the webinars, you got to prepare, because meanwhile the webinars are going on, you should focus on the questions, on the things, on the topics which I am teaching you. So allocate or dedicate the next 4 days, including today, to my plan. But once you are done with the webinar, you should prepare the last 8 most recent past papers. That's it. You can ignore the study text, you should ignore the exam kits, and you should focus on the 8 most recent past papers once you are done with the webinars. Those 8 past papers are easily available on the accaglobal.com, and remember, you should attempt all these papers on the ACCA practice platform. All these papers are available, so you can allocate or you can assign those papers to yourself, and you should prepare them. I will tell you what do I mean by prepare. So that word prepare is in inverted commas. So I did not say attempt those 8 papers, read those 8 papers, go through those 8 papers. No. Once you are done with the webinars, you got to prepare those 8 webinars. Now, what do I mean by prepare? Well, first of all, what do I mean by prepare? That I will be teaching you, or that I will be making you understand on the 4th and the final day. But as of now, just a quick, quick, uh, quick story on how to prepare. You are going to attempt that paper, right or wrong, that does not matter. And then you are going to explore the solution, read the solution, and then you are going to extract an attainable answers out of that ideal answers. Attainable answers out of those past paper ideal answers. Once you have developed your own past paper solution, a realistic one, and not an ideal one, an attainable one, you got to learn your answer. So this technique will almost eat up 7 to 8 or 9 hours on one paper. So 3 hours on attempting one paper, 3 to 4 hours on extracting answers, that makes 6-7 hours, and then maybe couple of more hours on learning your answers, on cramming a bit, important chunks. You need to memorize important chunks. I'm not asking you to learn everything without having the concepts. Once the concepts are clear. So overall, those 8 to 9 hours on one paper, 8 papers, 8 days, and you are absolutely ready for the final mock exam. And trust me, you will be able to produce a realistic and attainable answer which will give you 60-65 realistic marks in your final exam. And if you are a dedicated student, if your writing is of a qualitative nature, if you're having good background, you might end up scoring more than 70. Okay, and in the next once you are done with the webinars, once you are preparing those 8 past papers, you should read those 8 examiner reports as well. So along with when I say prepare the 8 most recent past paper, you got to go through the relevant 8 examiner reports as well. You got to prepare your notes for some common business risk, some repetitive risk of material misstatement, some very common ethical and professional issues, some very common and repetitive criticism on the draft auditor's report, some important elements of the other assignments such as acceptance consideration, some common procedures. So that whole activity, when I say prepare 8 most recent past paper, it incorporates all that stuff. You got to read 5 technical articles which I will be sharing with you. 5 technical articles on 5 core topics of your exam, and that those 5 technical articles by the ACCA will cover almost 80% of the AAA. So that's your to-do list for after your webinar. You got to master your 4 professional marks. How are you going to master your 4 professional exams, 4 professional marks? I'll be teaching you how to get 4 professional marks tonight. Once you have understood everything, you should follow that particular technique on a daily basis when it comes to those 8 most recent past papers. So you should not be saying, or you should not be thinking, okay, fine, I've understood how to score 4 professional marks. Now I will be applying all that technique on Monday, 6th June. Not at all. You should master your 4 professional marks on a daily basis. So you should apply those techniques on the September 2018, December 18 paper, March 19, on every paper. What should be your plan of action after webinar? Plan your mock exams. As I told you earlier, you got to attempt 2 mock exams, and at least one of the mock exam around 38 on 29 should be marked by an expert tutor. I hope somebody will be able to mark your mock exam. Last but not the least, remember these 3 words in red. You got to type. You are making your notes, you got to type. You are attempting a paper, you got to type. You are extracting an attainable answer out of an ideal answer, you got to type. So typing will lead to success. So that should be your plan of action after the webinar. This is it for now. Again, this is my WhatsApp number. You can reach me and you can contact me, and you can feel free to share your concerns or any other question. So this was a brief introduction about the next 4 days, and not only the next 4 days, for the upcoming days. I might be able to share a detailed plan at the end of the webinar, but as of now, If there is any question, please raise your concerns or raise your questions. Otherwise, we can straight away jump into the first topic of the day, and we can start with what? The risk. Okay, any question as of now? Okay, so I think it's time to start audit risk. So this topic, which I am about to start, which is called planning and risk assessment, this is the topic which will be tested in the question number 1 of your final exam. So what's risk? Risk means the chances of an unpleasant event. You don't want that to happen. You have got a fear of that. You don't want that to happen. It's an apprehension in your mind. So that's what we call risk. Now let's start. What's audit risk? What's business risk? So let's start with business risk. I am going to start with business risk. Okay, what's business risk? First of all, you got to understand business risk is the risk faced by the business, not by the auditor. So what's business risk? Business risk is the risk that the business itself, the company itself, won't be able to achieve its objective. So business risk is the risk that the business won't be able to achieve its objective. So it's the risk faced by the company. It's the risk faced by the organization. It's not about the auditor. But why, as an auditor, we are bothered about business risk? We are bothered about business risk because once the business risk is not managed by the client, normally the business risk will transformed into the risk of material misstatement. And because of the risk of material misstatement, the audit risk becomes higher. So try to understand the relationship between the business risk and the risk of material misstatement. Business risk is the risk that business won't be able to achieve their objectives. Once the management will fail in achieving their objectives, what options do they have? They will come up with something not that great. They might overstate the assets. They might understate the liabilities. So because of the business risk, the financial statements might be materially misstated, which is called the risk of material misstatement. And once the risk of material misstatement is high, the audit risk becomes higher. What's audit risk? An auditor might not be able to express the correct audit opinion. So once the financial statements are materially misstated, the auditor is most likely to come up with an incorrect audit opinion. There is a huge possibility that as an auditor, you might not be able to detect the material misstatement. So because of the business risk, a risk of material misstatement might be created. And because of the risk of material misstatement, audit risk will be created. So in the exam, how we are going to attempt business risk? Dear students, please realize business risk is not part of the AA syllabus. So when it comes to ACCA examination team, they know that the AA had no business risk at all. So they need to test your business risk in one paper only, and that's AAA. And they will definitely be testing business risk in the coming attempts. Why is that? Because all over the world, the business risk seems to be very, very high. The COVID-19 itself was a business risk. The economies are going down. Inflation is on the higher side all over the world post pandemic. So all those factors are making me realize that if I have to come up with an ACCA exam on AAA, I will definitely be exploring business risk. So business risk, considering the current political and the economical situation of the world, the wars are going on, the political instability is on the higher side, the prices of the commodities are rising by an extraordinary speed, the inflation is on the higher side. All those factors make me understand that ACCA examination team will definitely come up with business risk. Now, once you have understood what's the business risk, how are you going to attempt the business risk? Okay, when you have to attempt the business risk, make sure that you explain the negative impact it will have on the company. So you will identify a business risk from the question, and then you have to explain it. You have to explain what negative impact it could have on the business, what negative impact it could have on the company's profitability, on the company's cash flow, on the company's liquidity, on the company's reputation, on the company. Remember, when you are describing the business risk, you have to explain the negative impact, never ever the positive impact. It will always be a negative impact, and you have to explain the negative impact for the company. So, for example, when describing the business risk, remember to explain the impact it will have on the company. That is, impact on the profit, impact on the cash flow. So, if couple of competitors have merged and they have collaborated, as a result it might be difficult for the company to survive, because there is a monopolistic situation going on, and it will lead to, the future revenues could go down, it could lead to cash flow problems. So you have to explain the negative impact on the business, negative impact on the company, negative impact on the business. It could lead to cash flow issues, it could lead to reputational issues for the company, it could lead to legal issues. The company might not be able to, ensure the compliance with the relevant laws and regulations. So you need to focus on the company. That's how you attempt the business risk. As a student, you must ensure your answer with respect to business risk should identify the risk from the question. This will give you some marks, half mark, when you are going to identify the business risk from the question itself. You can copy that story from the question itself, but then you have to explain why you think that that particular issue or that particular risk is a business risk. You will only be able to explain the business risk if you are going to explain the negative impact it will have on the business. What about the marking scheme? Many students will tell me that one business risk means 1 mark. No, 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 that's not the case. One business risk might give you 2 marks. So there are up to 2 marks for each audit risk identified and explained. So up to 2 marks for each business risk identified and explained. Now, when I say up to 2 marks, it means if your answer is not good enough, markers might give you 1 mark. Markers might give you 1.5 marks, but you can go to the extent of 2 marks. So we'll keep that thing in mind, that we are getting 2 marks for one business risk. My dear students, please realize my job is to make things easy for you. I'm not here to complicate things. So if examiner on Monday, 6 June 2022 will ask you for, identify and explain the business risk, 10 marks, please attempt 5 business risk and move on to the next part. Please assume, try to be optimistic that there are 2 marks available per well explained business risk. So you should not be attempting 6, 7 or 8 business risk. If there are 10 marks, attempt 5 and move on. Once you have completed the whole exam, if you have still got the time and nobody is interested in talking to you, obviously nobody will be, you can add on the 6th business risk or the 7th risk if you are so desperate to add 6th or 7th. But initially, if there are 10 marks, attempt 5 business risk and move on. And that is how you need to prepare yourself in the next 10 days once the webinars are over. You have to attain an attainable standard. You should not be following an ideal standard. Once you will explore the past paper answer, for the 10 marks, there will be 8 or 9 business risk. But the examiner marking scheme will let you know that there were 2 marks available per business risk. So if you had only attempted 5 businesses, you would have scored full marks. So what's the fuzz? What's the problem? Why there is so much pressure? Why we are exploring past paper answers and getting blown away? So 2 marks for each business risk, provided it is well identified and explained. Oh, there is a twist in business risk as well. In addition, and when I say in addition, it means over and above those 2 marks. Over and above those 2 marks, allow half mark for relevant trends which form part of the business risk evaluation. For example, you were trying to make me understand that because of a certain issue, the future revenues are at stake. In order to complement your point of view, in order to complement your answer, you extracted some financial data from the question, and you said, and we can also see from the question itself that the revenue has gone down by 18% in comparison to the last year. So if you are going to explain your business risk with the help of a certain trend or a certain increase in percentage or a decrease in percentage, that could give you another half mark. That could give you another half mark. So dear students, please follow this marking scheme. If there is a question for 8 marks, 4 business risks are more than enough. Trust me on that. Even if the answer, the past paper answer is having 7 or 8 business risks, 4 business risks are good enough to score full marks when there are 8 marks available. So that was the marking scheme for the business risk. Keep that in mind, and it might, it might vanish away. You might, you can forget it. It's pretty normal, but you got to read, you got to explore the marking scheme for every paper. Repeat it, repeat that drill, so that you will master that. So how to attempt the business risk? So that was the marking scheme. Now, how to attempt the business risk? Remember, you got to explain the potential damage to the company, the negative impact it will have for the company. Whenever you are saying something from the question itself, come up with the reason. This could be because, this could lead to, there is a risk that, it could lead to, say it why. So if you're saying something, you're talking about some upcoming law or legal compliance or anything, or maybe health and safety laws and regulations, say why you think this is a business risk. Maybe client won't be able to make compliance with those strict laws and regulations. As a result, they could be fined, there could be reputational issues, there could be some hazard. So say it why, explain your point. Remember, those business risks are extremely important for the AAA exam, which will eventually lead to the material misstatements in the financial statement. Majority of the business risk, if they are flipped, if you turn them, if you see the other side of the picture, the business risk will lead to material misstatement in the financial statement, and that, my dear students, will lead to audit risk. So focus on those business risks which are having 2 sides. Number 1, business risk, that is the negative impact on the company, and the second side of the picture, or the second side of the story, is that if that business risk is not well managed, that could lead to material misstatements in the financial statements. So let's explore the second risk in our syllabus, and that is audit risk. What is audit risk? Audit risk is the risk that you as an auditor will come up with incorrect audit opinion. So you will say that the financial statements are representing a true and fair view, but as a matter of fact, or unfortunately I would say, the financial statements won't be expressing a true and fair view. So the risk that an auditor might express an inappropriate audit opinion is called audit risk. Now, why are we having this audit risk? Why are we having this audit risk? I wonder, auditor is so well qualified, so well experienced, so well trained, the whole mechanism is so well processed. Why are we having audit risk? We are having audit risk because the financial statements are vulnerable, because the financial statements are never 100% pure. So audit risk has got 2 major components. Number 1, risk of material misstatement in the financial statement. So the first component of the audit risk is called risk of material misstatement, and it has got to do with the financial statements. And I don't prepare the financial statements. I am the auditor. I don't prepare it. So the financial statements are prepared by the management, and there are chances that the financial statements prepared by the management might have mistakes in it, and that is called the risk of material misstatement. Why there is a risk of material misstatement? That could be because of the nature of the company, which is called the inherent risk. Maybe the financial control process or the internal controls are not that great, and because of the poor control system, there could be material misstatements in the financial statement. So control risk also leads to the risk of material misstatement. So inherent risk and control risk both leads to one same thing, that is the risk of material misstatement in the financial statement. Just imagine you are auditing a company and the inherent risk is zero, the control risk is zero, that is the risk of material misstatement is zero. So if the financial statement are so pure, automatically the audit risk is zero. But that is never the case. What's the second component of the audit risk? Okay, fine, the material misstatements in the financial statement, risk of material misstatement. Okay, fine, that's a client specific risk. What about the auditor? As an auditor, I'm supposed to audit. As an auditor, I'm supposed to come up with the independent examination, and that is called detection risk. What if I won't be able to detect the material misstatement? What if my sample is not truly representing the entire population? So detection risk has got two components, two reasons. Sampling risk, where the sample does not truly represent the population, or non-sampling risk. The sample was truly representing the population, but I made a mistake. Maybe my judgment was not correct. Maybe my resources were not that great. So there are two components of audit risk. Number one, the risk of material misstatement that is in the financial statement, and it's a client specific risk. Number second, the auditor specific risk, which is called the detection risk. Now let's go to the main part of the AAA, and the main part of AAA is how to attempt audit risk. Now what I'm saying, how to attempt audit risk. Now we all know audit risk could be further classified into two categories. Number one, risk of material misstatement. Number second, detection risk. Detection risk is hardly ever tested in AAA because it is usually tested in AA. But let's explore both of them. Let's be on the safe side. Let's start with the more common one, how to attempt audit risk. And when I say audit risk, I mean how to attempt the risk of material misstatement. How to attempt risk of material misstatement. First of all, when you are going to attempt the risk of material misstatement, you should highlight, whether at the start of your explanation or at the end of it, you should highlight which financial statement items you think are affected. So it's about the revenue recognition. So you have to say that revenue is at risk of overstatement. You have to explain which financial statement item is at risk of understatement, overstatement. So you have to tell me which financial statement items. Then you have to tell me which financial statement item is at risk of overstatement and which financial statement item is at risk of understatement. So you have to be more, expressive, and you have to explain which financial statement items are at risk of overstatement, understatement. Sometimes there will be a certain element, a certain financial statement item, a certain situation which could go both overstated or understated. And if that is the case, only then you can use the word misstated. Otherwise, you have to be as specific as you can. So which financial statement items are at risk of understatement, overstatement? Then you should explain what the relevant accounting standard says, what the relevant accounting rule is. You should briefly explain. Don't go into extraordinary detail what the relevant accounting says. Then you have to explain why you as a student, why you as an auditor think that the client's accounting treatment is wrong or could be wrong. Now that's a huge statement. Sometimes the client's accounting treatment will be subjective. The examiner will not let you know what was the actual accounting treatment made by the client. If that is the case, you will express your skeptic attitude and you will say there is a risk that the client might not have recognized, they might not have charged, they might have recognized. So you have to explain why you as an auditor think that the client's accounting treatment could be wrong. You are not dead sure, you are not absolutely certain. But sometimes the client's accounting treatment will be expressed clearly and categorically by the examiner in the question. If that is the case, you can't say there is a risk that. You can't say there is a risk that the client might have recognized. No, no, you're not supposed to use the word might. You can't say there is a risk that. You have to be more authoritative, and you have to be more, conclusive, and you will say the client's accounting treatment is wrong. The assets are overstated, the liabilities are understated. So which financial statement items? Understated, overstated, relevant accounting rule, briefly. Do not write paragraphs on that. Move on to the apprehension, move on to your skeptic attitude, and express why you think that the client's accounting treatment is wrong or could be wrong. Maybe the examiner has given you good enough data, you might be able to calculate the materiality. So calculate the materiality using the mnemonic RAP: 0.5% for revenue, 1% for assets, and 5% for profit. I repeat, 0.5% for revenue, 1% for assets, and 5% for profit. RAP: revenue, assets, profit. And you have to relate your calculation of materiality with the financial statement. You have to explain how much does it represent with respect to the profit or loss account, how much this is with respect to assets, how much it is for the revenue. So you have to relate the materiality with the financial statement. So you have to explain. So this amount represents 17% of the profit, which is material for the profit, for the statement of profit or loss account. So you have to relate your materiality with the financial statement, and that is how you could score the maximum 3 marks available per risk of material misstatement. Mind you, if there is no materiality calculation, and obviously you can't relate the materiality as well, you will only get 2 marks. So sometimes you will be able to get 3 marks, and sometimes you will be able to get 2 marks. Now, as a student, my question is, will I be able to get the materiality marks in every exam or in every risk of material misstatement? Oh, well, it's a subjective matter. Examiner has, established a cap, a threshold. Examiner will never ever give you more than 4 marks for materiality. So if you are able to calculate and relate the materiality on 5 or 6 occasions in one single examine on one single question, number one, examiner will not give you more than 4 marks. Even sometimes the examiner will come up with 3 possible instances where you can calculate materiality. So examiner is not going to give you good enough data for materiality. So keep your one thing in your mind: when it comes to risk of material misstatement, with materiality calculation, you should not exceed 4 points. So if you have utilized materiality 4 times, and if there is a possibility to utilize the materiality 5th time or the 6th time, do not use it, because you are not going to get any marks for that. So maximum 4 points, having 3 marks, just like that. Otherwise the rest of the risk of material misstatement would be without the materiality. So you can figure out 2 marks per risk of materiality. Okay, how to attempt again audit risk, but now the second and the last type of audit risk, which is detection risk. Who is the detector? The auditor. So who is responsible? The auditor. So auditor might not be able to detect the material misstatements in the financial statements. Auditor might not be able to detect. So it's about the auditor. Auditor might not be able to detect the material misstatement in the financial statement. But why is that? Because it's a new audit client for the auditor. And as a result, audit firm will lack the accumulated knowledge and experience. They might not be having good enough information or know-how of the client. Maybe this particular audit is extraordinary time pressured. So because of the time pressure, audit firm is feeling under pressure. They might cut the corners, they might commit some mistakes, they might not be able to perform the audit according to the plan, and as a result they might come up with incorrect audit opinion. Maybe the audit firm is lacking resources. Maybe out of nowhere, a certain problem came up, and as a result they've lost their resources. Maybe the employees are sick or any other issue. So as a result of that lack of resources, the audit firm might not be able to detect the material misstatements, and that's what we call detection risk. And as a result, auditor will come up with incorrect audit opinion. Audit firm might lack the competence, or maybe the client is utilizing some third party services. And when the client is utilizing some third-party services, as a result of that, it becomes relatively difficult for the auditor to gather sufficient appropriate audit evidence. So all those factors are, they lead to detection risk. So that was something about risk. Now you guys are ready to explore a past paper question on business risk, on risk of material misstatement. But before we move on to the past paper question, let's explore what is or what are 4 professional marks. Don't forget, I have highlighted those 4 professional marks in the earlier slides where I was emphasizing why students fail this exam. And even I have explained it to you that once you are done with the webinars, you should be focusing and following, those 4 professional marks on a daily basis. Now, as you all know, those 4 professional marks will be strictly within the question number 1 of your AAA exam. How are you going to get those 4 professional marks? The first professional mark is for the format of the briefing notes. What do I mean by format of the briefing notes? In every exam, you will receive an email from your engagement partner. And being the audit manager, you have to prepare the briefing notes for your engagement partner. So you will focus on the email, and you will that email was to audit manager from the engagement partner. You will swap these two. In the two, you will say to the engagement partner, and from you will come up with your own audit manager. So from the question, you can copy to at the place of from, and from at the place of to. So you just have to swap it. And then you have to write the subject of the email remains unchanged. So whatever subject they have in the email which you have received as a student, as an audit manager, the same subject goes on. And that is how you will start your briefing notes, with the heading of briefing notes, and then format to, from, subject, and this will give you 1 mark. So this 1 mark, I believe it's a walk in the park, and everyone will be able to score that. Let's talk about the second professional mark. You should explain, or you should write an introductory paragraph. And that introductory paragraph is, again, it's not a challenge. Let's keep it simple. So how are you going to introduce, or how are you going to come up with an introduction paragraph? We'll explore an introduction paragraph in the past paper question in a short while. But as of now, you can simply start your introduction paragraph by saying these briefing notes have been prepared for the client, whatever the name of the client. For example, these briefing notes have been prepared for the XYZ company in order to help you in the in planning, and in order to assess the risk for the year ended. And then once you are done with this sentence, then you should focus on the exam requirements. If the examiner was saying evaluate the business risk, you will say the first part of the business risk is about the evaluation of the business risk. The second exam requirement was, explain the risk of material misstatement. So you will say, and then the briefing notes will go on to explain the risk of material misstatements contained. So you will just transform the exam requirements into the introduction paragraph. We don't have to come up with our own wording. Rather than evaluate, we'll say evaluation, and then the same exam requirement from the question. So we'll copy certain chunks from the question, from the exam requirements, and that is how we'll make our own introduction paragraph. But then we'll say, lastly, there are certain procedures on the impairment expense. So examiner was saying, explain the procedures you will perform on the impairment expense. You will copy that requirement and you will amend it up, and that is how you are going to make your introduction paragraph. The third professional mark is about the headings or the structure. So you have to, if there are like 8 marks available for the business risk, you should come up with 4 business risk, and you should come up with 4 business risk along with 4 headings. So you should use headings. So if there are 20 marks for risk of material misstatement, and let's say you are writing, let's assume there is no materiality, let's say you are writing 10 into 2, 10 risk of material misstatement, you should come up with 10 headings. You should also use heading when you are attempting another part or you are writing procedures. So you should use headings for this question number 1, and that heading, that structure will give you another 1 mark. Last and the fourth professional mark is about the quality of writing, the clarity of writing. Please remember, if you are going to overwrite, you are not going to get this 4 professional mark. If you are not going to explain your answers, you are not going to get 1 professional marks. For every business risk, for every risk of material misstatement, for every ethical and professional issue, there are certain key words, certain key chunks. Those are called quality of writing. So if you are going to follow my instructions post webinar, and if you are going to make your notes, that will help you in obtaining this 4th professional mark, which is about quality of writing. So it's not about excessive writing. It is never about excessive writing. It's about being concise. It's about being to the point, using professional words, using good words, using qualitative words, extracting from the past paper answers. So that's how we are going to get 4 professional marks. When it comes to introduction, don't forget, you have to repeat the requirement using the copy paste technique, which is not that difficult. So we are done with this, risk. Now it's time to start the questions. Meanwhile, if you have got any question or any concern, please use the chat box and raise your question, and then I'll start the past paper question in a bit. If you have got any question, please do. Okay, any? Give me a second. Give me a second. There is an issue. Wait a second. Okay, before we move on to the past paper question, let's answer few questions. Let's have a Q&A session for a short while, and then we'll move to the past paper question. Uh, uh, okay, thank you, Sarosh. Okay, thank you, Manzoor. Uh, Um, okay, first tricky question from Mota Siddiqui. Will you mark the mock for us? Option number one, or strategy number one, or plan one is you should request your tutor to mark your mock exam. But if you're not having any tutor at all, unfortunately, or if your tutor is not available, in that case you can contact me. Otherwise, it's best that you should contact the tutor, because it's important that if you have studied from, let's say, Miss Teacher A or Teacher B, your mark, that particular individual is in the best position to mark your mock exam rather than someone absolutely fresh. Okay, what as far as the uh, WhatsApp group link is concerned, it is available in your answers. Don't worry, you'll get the WhatsApp link, no worries. Okay, is there any WhatsApp group? Yes, we have. Yes. Okay, another important question. Majbeen from Majbeen. Hi, sir. Will these remaining days be enough to pass AAA? Absolutely, yes. Majbeen, if you are listening to me right now, if you are going to follow an attainable standard rather than an ideal standard, if you are going to follow these 4 days, and if you are going to follow the instructions post webinar, you will be able to make it. And when I say you won't be able to make it, I'm not talking about 50, I'm talking about 60, 65. But you should not feel under pressure. You should not think about getting 85, 80. You cannot replicate past paper answers. So you have to come up. Let's make things simple, right? Yes, you can pass. Okay, no questions, not now. Uh, are you going to be available to mark the mock exam? Well, I've already answered that question. Your first, you should first try to contact your tutor. If you're not having any tutor at all, if you're having a genuine case, then I can see. We can do it. Okay, an important question which I missed earlier. Objective here means what, sir? See, when I was explaining business risk, I was saying it compromises the objective of the business. What's the objective of the business? The survival, the growth, the increase in revenue, the profits, the cash flows. So all those are objectives of the company. Okay, yes, we'll have break. We'll have break. I'll have break. Okay, I'm having a bit of a difficulty in reading the question. What if I attempt 6 business risk? If there are 8 marks, you should attempt 4. If there are 10, you should attempt 5. Once you have completed the whole exam, if there is time and you have got nothing else to do, yes, you can attempt another one. If there are 10 marks available, you should only attempt 5 in the initial go, because the real agenda is to attempt the full paper with moderate quality rather than compromising the quality at the end of the exam or in the last 30 minutes. So do not attempt more than the required one. Okay, another tricky question. If I attempt 6 business risk, will the examiner choose the first 5, or will my marks be capped at 10? Oh, if you are going to attempt 6 business risk for the total 10 marks, the examiner will give you marks for, if there are up to 2 marks available per business risk, the examiner is going to give you marks for the best 5. So there is no point of attempting the 6th one. Yes, if your first point is a rubbish one, the examiner will give you marks for the second, third, fourth, fifth, and the 6th. Examiner will ignore the first one. But what I am trying to say is that you should take a deep breath. You should, think of before answering your question, and you should only attempt 5 if there are 10 marks. There's no point of attempting the 6th. How do we know if we have explained well enough to score 2 marks? you have to check out the past paper answer. If your answer is around 40-50%, if there are 2-3 keywords in every sentence, if those keywords are in your answer, you are there. Is there any changes in the syllabus from last attempt? No, there is no major change. There is no change. But from the September 2022, there are many changes, especially in the exam format. What is the purpose of conclusion and how to deal with it? The purpose of conclusion is to make sure the structure of the briefing note is a good one. The conclusion is part of the structure. So you have to make sure that you write a conclusion, and you have to say that overall there are certain business, there are few important businesses, such as mention couple of them, and the company needs to, the audit firm needs to consider few important risk of material statement. So you have to write a nice and easy sentence. If you are going to, attempt 2-3 conclusions from the past paper answer, you will be able to understand what's the conclusion is. You can squeeze it. Again, the past paper answers conclusion, you can squeeze it a bit. I have a question from Sidra. Sidra is saying, I have a question that how new management system is a business risk. Please explain. Is it a risk of material misstatement, but how it is a business risk? It is a business risk. What if that new business management system, the client, the employees are not that much familiar with it? What if that new management system is not recognizing or recording things on a timely basis? As a result, management is unaware of few things. So management are not having clear picture of how things are going on. So they are not aware of everything. So they are not well informed because of that, new management information system. So that could lead to businesses. Sidra will be exploring a past paper question tonight, and we'll have that new management information system in it as well. So wait. Farah, yes, you have got 3 hours and 15 minutes for professional exams, such as optional exams. Yes, you have 3 hours and 15 minutes. Okay, Mohammed Ayaz is saying, please share the most repetitive IAS and IFRS that we should prepare in detail. Okay, now that's a very important question. How are you going to prepare your IAS and IFRS? So if we are going to attempt a past paper question tonight relevant to risk, we might encounter IS 36 impairment. We might encounter IS 16. We might encounter IS 20 government grant. We might encounter, let's say, IS 23 borrowing cost. So all those standards, you should, read their summaries tonight. That's how you are going to prepare your IFRS and IAS. And all those IFRS and IAS, there will be certain key sentences about them in the past paper answer. You should extract those, and you should make your own notes relevant to IAS and IFRS with respect to AAA, not with respect to SBR, not with respect to FR. So make your own notes with respect to IAS and IFRS, with respect to extract the sentences from the past paper answers. Sir, sometimes when I read the question, I'm unable to identify enough risk. How should I improve my approach to identify more risk within the question? Simple as that. First of all, you have to attend these 4 days of webinars, and then you have to prepare 8 past papers. When I say prepare, it's a very detailed thing. I told you earlier, follow that. Okay, Mohammad Ayaz is saying, is there anything which we wrote learn? Yes, common business risk, common audit risk, important sentences, important terminologies. You have to make your, extract your answers, and you have to create your own past paper answers for all those 8 exams, and that's how you will be able to get straightforward exams in your straightforward marks in your exam. Okay, Simran is saying, thanks for the motivation, most welcome. What typing speed is needed for AAA passing? You need to make sure you attempt the full paper. And you will be able to do that, Samad, you will be able to do that if you are going to prepare 8 past papers post webinar. Okay, Daniel has asked a very interesting question. Is it good approach if we start the exam from the last question? There are many tutors who will encourage you to start the paper from the question number 1, but I am totally against it. Well, my philosophy is that you should start with the completion, review, and reporting question, which is a sure shot question in your exam, which is the question number, most likely the question number 2 of the exam. The section, when it comes to section B, that is going to be the first question. So I usually recommend to my student that you should start with the section B, so that you should leave 1.5 hours or 1 hour 40 minutes for the last question. That has to be the question number 1 of your final exam. So if I have to attempt the AAA exam tomorrow morning, I'll be starting with section B rather than section A. Why I'm saying that? Because the scenario or the complexity of the question number 1 is on the higher side. So we tend to stuck somewhere. We tend to, we tend to get stuck somewhere in the question number 1, and as a result, what happens that we end up having time mismanagement. So I would encourage you to start with the simple straightforward question 2 and simple and straightforward question number 3, usually having a scenario of 1 page only. Question number 2 is usually quarter of a page and then a quarter of a page. Question number 3, usually 1 page, 1.5 page. What about question number 1? 3, 4, 5 page along with the financial data. So I'll start with the question number 2, then I'll go with to question number 3, or question number 3 and then question number 2. That's a personal choice. And then I'll go to the question number 1. Omer has asked a question. Is it mandatory to write conclusion? If you are not going to write the conclusion, you will lose half mark from your structure, 1/2 mark from your professional mark. So you need to write the conclusion. No, Asad, there is no open book policy. Sorry. Okay, before we finish off this Q&A session, Mohtar has asked, according to you, what is the ideal time allocation for each question? Well, you should allocate 45 minutes on the question 3. You should, which is a 25 mark question. Then you should allocate another 25 mark, another 45 minutes on question number 2. So you are done with 1 hour 30 minutes. Now you are left with 1 hour, not the 30 minutes, but 1 hour 45 minutes for the question number 1. Why extra time for the question number 1? If it is for 50 mark, the time should be double. Rather than 45, it should be 90. No, I'm giving you more than that. Rather than 90, I'm giving you 105 because of 2 reasons. A, you will be tired, you will be fatigued, your hands, your body, you're mentally tired. That's why extra time for the question 1. Secondly, the story or the complexity of the question number 1 is on the higher side, so you need more time. Last but not the least, there are 4 professional marks in question number 1, so you have to decorate a bit, and that will take some time. But that's a pleasant story because you will be able to master the 4 professional exams. So actually there are 46 marks exam requirement. So is it clear? 45 minutes for question 3 or for question 2, 45 minutes each for question 3 and question 2, and then 1 hour 45 minutes for the question number 1. How does that sound? Daniel, is it good? Should a member of the audit committee always be involved during the planning audit? Not at all. The audit committee will have non-executive directors, Akil, so they are not going to be part of the audit planning. Audit planning is the job of the audit team. Most welcome, Taruna. For the standards apart from IAS, IFRS, do we need to know about ISO or I? No, Amar, you can skip. You can simply ignore those ISAs. You don't have to worry much about them. Mohammad Ayaz is saying, thank you very much for bringing motivation, energy. Mohammad Ayaz, you're most welcome. My target, my agenda, or the why I'm here, why I've been allocated this webinar, to make AAA simple. Trust me, in UK, the tutors, or in other parts of the world, tutors and the students are making it very simple. They're not following the past paper answers. They're squeezing past paper answer and they're getting the pass. So we have to make things easier for ourselves. It's that easy, isn't it? I'll show you whatever I'm saying. I'll show it to you. So Rosh is saying, sir, do we need to write the name of the international accounting standards? Yes. International auditing standards? Yeah, well, you can ignore them. Okay, Athena is asking, how important is it to familiarize ourselves with ratio analysis? Absolutely, yes. It's very important for you. Okay, somebody will share the WhatsApp group link. Don't worry. Otherwise, my number was all over the place. You can contact me and I'll share the WhatsApp link. Don't worry. Only if it was that easy for us, it will be, provided you will follow the technique and you will apply the technique on straight 8 days post webinar. Well, the prospective financial information could be in the form of statement of financial position, profit or loss account, or it could be in the form of cash flow forecast. Okay, now I'm done for the questions. I'm done with the questions. I'll come back to the questions after a while. I think it's time to start the question. Well, before we start the past paper question relevant to the business risk and relevant to the risk of material misstatement, do you guys want to have a break? I can give you a break for maximum 5 or 7 minutes. As of now, from my laptop, it's 9:58 p.m. So we can resume at uh, 10:05. So we have got a break for 7 minutes. Okay. Can I have some confirmations? Can I have some okay from you guys? Okay. So there is a break for 7 or 8 minutes. Let's come back and whatever we have studied, the marking scheme, whatever I'm trying, let's extract an ideal answers. We'll replicate all that into the, with the help of a past paper question. And I have selected a past paper question which has got both ingredients, the business risk and the risk of material misstatement. So hang on. So let's have a break for 7-8 minutes. I'll be back. Thank you. Okay, so what are the learning outcomes from the day? We have figured out what we are going to do on day 1, day 2, day 3, and day 4. What we are going to do after the webinars leading to the mock exam. And we are trying to make things simple. It's not a big deal. It's not a big deal to get 50 out of 100. No problem with that. And only if we do the basics right, if we if you keep things simple, if we follow the marking scheme, if we type everything on the ACCA practice platform, if we learn or if we extract an answer and if we learn that particular answer, because there are certain sentences, certain risk, certain ethical issues, certain criticism on audit report which is monotonous. If somebody is going to type and learn, prepare and learn 5 questions on the criticism of audit report, trust me, that student can score 15 out of 15 marks in the 6th question. In fact, that student can make a brand new question on his own or on her own. So it's that simple, provided there has to be a learning curve, there has to be an element of repetition, there has to be an element of learning, there has to be an element of typing. So the agenda for the today was risk. And when I say risk, it means both risk. The business risk, which is the negative impact for the business, and the risk of material misstatement, or for that matter, audit risk. Let's start a past paper question. And the past paper question which I have selected for you is from the December 2018. And let's explore what this question has to offer. You are a manager, and this is obviously question number 1, the question set on the planning stage of the audit. So you are a manager in the audit department of an audit firm called H. Huntsman and Company, a firm of chartered certified accountants, and you guys are responsible for the audit of several companies and for evaluating the acceptance decision in respect of potential new audit clients. So that first sentence makes things a bit complicated, because you are now right now involved in 2 things. First of all, you are, responsible for the audit, and you are also evaluating a potential new audit client. Okay. One of your audit client is called Redback Sports Company, which operates a chain of sport and leisure centers across the country. The company has a financial year ending 28 February 20x9, and you are about to start planning the audit. Stella Cross, the audit engagement partner, met with the company's finance director last week to discuss business developments in the year and the recent financial performance. So in the question, you will have certain background about the business development and the financial performance as well. In addition, Stella has been approached, the audit engagement partner, her name is Stella. Stella has been approached by Mick, the managing director of EMU Gyms. Mick has inquired regarding whether the audit firm called Huntsman and Company can provide the company with an audit or limited assurance review. And Stella would like you, the audit manager, to evaluate this request. Huntsman and Company already provides a payroll service to EMU Gyms Company and has assisted Mick with his personal tax planning in the past. So our audit firm has already provided the payroll services to that particular gym. It means somehow or the other we know that client. So when we have to evaluate the whether we can accept a new audit line, there are certain things called triple P, triple R, IMMF: professional clearance, preconditions for an audit, integrity of the client, risk, the fee. You know, integrity of the client is not an issue here. Why? Because we are already working for them. We are already providing payroll services to them, so we know their integrity, right? Mick also has a suspicion that several employees are carrying out a fraud at the company and has asked whether an audit or limited assurance review would have alerted them earlier to this situation. So they believe there are frauds going on. You are provided with the following exhibits. Let's focus. The first exhibit is an email which you have received from your engagement partner called Stella, and it's about both the Redback Sports Company and EMU Gyms. So here is the first extract, which is an email. There are exam requirements over here. So that's the email, and there are exam requirements. What about the second exhibit? The second exhibit is basically they are the notes of a meeting. Which meeting? The meeting which was held between Stella, which is your engagement partner, and the finance director of Redback Sports Company. So you'll get all the business background information about the Redback Sports Company from the exhibit 2. You will get many business risk from the exhibit 2, and you will also get risk of material misstatement from the exhibit 2. Moreover, there is an extract from the latest management accounts of Redback Sports Company. So you will also get few business risk, or most importantly, risk of material misstatement from your latest management accounts. Many students tend to ignore the financial data available in the question, but we won't ignore it. We'll extract something out of it. The fourth extract is a conversation on a telephone call between, again, the engagement partner Stella and the managing director of the gym called Mick. His name is Mick, and that the conversation is in the form of a notes, exhibit 4. Okay, respond to the instructions in the email from the audit engagement partner. The split of the marks is available. Yes, there are 4 professional marks awarded for the presentation, logical flow of the briefing notes, and the clarity of the explanations provided. No problem with that. Exhibit number 1. So to audit manager, what you are going to do, you are going to copy to from subject, and you can swap that. So the subject remains the same. You are not going to change the subject. Where in to, what you are going to write, to Stella Cross. So to this, copy, type for from, and then copy this audit manager, and copy all that subject, all that over there. So you are done with 1 mark without doing anything special. What about the instructions? So I have provided you with some information in the form of number of exhibits. We all know what exhibits are. The exhibit number 1 is an email. The exhibit number 2 is the background information, the meeting notes, and exhibit number 3 is the management accounts. Exhibit 4 is the meeting notes from the telephone call. What about the exam requirements? Evaluate the business risks to be considered in planning the company's audit. 8 marks. So how many businesses bare minimum we should attempt for 8 marks? How many business risk? Thank you, Zishan, Ammar, Faraz, Ayaz. Well done. 4. Let's keep it simple. Well, how many businesses we are going to get in the solution? How many businesses we are well, there will be at least 7 or 6. Yes, 8. Could be. Yes, a good answer would be yes. Yes, Motor, Umar, more than 4. In the past paper solution, there will be more than 4, 5, 6, 7, or 8. But at the end of the answer, in the marking scheme, the examination team has said maximum 8 marks. So if there are 2 marks for each one of them, why would you attempt 8? Are you trying to get 8 to the 16 when they are saying maximum 8? Good, good, good. Let's keep it that way. So evaluate the businesses to be considered in planning the company's audit. So I will start my introductory paragraph. The first part of the briefing notes is about the Redback Sports Company, which is an existing client, and the year end is 28 February 20x9. And the briefing notes will start with the evaluation of the businesses to be considered in planning the company's audit. So evaluation of the businesses, and then copy. Then there is an evaluation of the risk of material misstatement to be considered in developing the audit strategy and audit plan. You can copy all that. There are certain design, don't copy design. There are principal audit procedures to be used in the audit of grant received from the government in September 2008. Copy. 1 mark for 1 substantive procedure. Then the second part of the briefing note is about EMU Gyms Company, and in the briefing notes there is an evaluation. The second part of the briefing notes is about EMU Gyms, and the briefing notes will evaluate the matters, or evaluation of the matters to be considered in deciding whether we can accept this new client for an audit or limited assurance review. Copy that. And there is a discussion at the end of the briefing notes. I will add something there, and at the end of the briefing notes there is a discussion whether an audit or limited assurance review of the financial statements in previous years could have uncovered the fraud. So that's how my introductory paragraph will shape up, and I will be able to score these marks. Are you feeling confident for the first 2 marks? If not, let's explore the solution simultaneously. So to Stella from audit manager, the subject remains the same. You get 1 mark by doing nothing basically. Then the introductory paragraph. The introductory paragraph has been divided into two sub paragraphs. Why is that? Because there are two different clients. The first audit client is called Redback Sports Company. The second audit client is called EMU Gyms. If there is only one client, you can come up with one paragraph. You don't have to split your introductory paragraph. It's not necessary. This particular answer has got two paragraphs because there are two clients. So the first part of these briefing notes had been prepared in relation to audit of Redback Sports Company, and then you can copy these notes, evaluate the business risk and the risk of material statement. You can copy all that from the question. The second part of the briefing notes uh, consider that whether the notes finish by discussing a question which has been raised, so you can use that wording and you can copy the requirements. Even if you find that in the past paper the examiners has used their own wording, you can simply ignore them. You can copy the requirements and use some common sense, and you can practice that technique and you can score full marks in your professional marks. So now we have already scored 2 marks out of the required marks. Let's continue. Okay, 8 marks for business risk, which means we need to come up with 4 business risk, right? Now what about the risk of material misstatement? Evaluate the risk of material misstatement. How many marks do they have? 18. So how many risk of material misstatement you are going to attempt? Well, that's a tricky question. If I will be able to utilize materiality, only 4 marks are available for materiality when it comes to question number 1. So on 4 occasions, I will be able to get 3 marks. So that means 4 points, 3 marks each. 4 threes are 12. 4 points, 3 marks each. 4 threes are 12, right? Now out of 18, imagine I've scored 12 marks. How many more marks do I need? I need 6 more marks, right? And those 6 marks per risk, how many marks I'm going to get? Only 2 marks, because now I'm not going to use materiality. So in order to get 6 marks, considering each point has got 2 marks, I need to come up with 3 more risk of material misstatement. So overall, in order to get 18 marks, how many risk of material misstatement minimum I need to attempt? Not 6, not 9, not 8. Yes, Umar, you are absolutely right now. 7. So let's assume I'm going to get 4 points having materiality. So 4 threes are 12. And then 18 minus 12, I'm left with 6. And for every point, I'm going to get 2. So I need 3 more. 3 twos are 6. So 4 plus 3, I need to attempt 7 risk of material misstatement. Just in case, if there are only 3 materiality points, if there are 3 points having materiality, I need to add 1 more point, right? So in that case, I might have to attempt 8. Otherwise, trust me on that, 7 is a fine option. Don't take pressure. Just think and talk to yourself. You just need 4 business risk and you just need 7 risk of material misstatement to get full marks, and you should move on. 7, 4. We need 4 business risk. We need 7 risk of material misstatement. And what about the principal audit procedures? 1 procedure means 1 mark. So you need 6 marks for that. Let's ignore the rest of the 2 requirements for now, which is about a comparison of limited and assurance and audit, which is not that difficult. Before accepting a client, what factors you need to consider? I think you need to consider the reputation of the client, the integrity of the client, the resources, the fee, the risk, all those factors. And you need to come up with a comparison. You need to discuss whether audit or limited assurance review could have uncovered the fraud. Well, when it comes to limited assurance review, we tend to focus mostly on inquiries and analytical. So it's difficult to uncover the fraud using limited assurance review. Audit, yes, with audit, there are more chances, but even then there is no guarantee. So these 2 requirements I'm leaving for you. I'm right now focusing on part A, B, and C, which is about the risk. Okay, let's explore the exhibit 2. Let's start reading it. Motar Siddiqui saying I'm unable to hear. Are you all able to hear me loud and clear? Okay, okay. Please, anyone, if there is anyone having problem, please. Okay, loud and clear. Thank you very much. Let's continue. Okay, exhibit 2, which is about the notes of a meeting held on 30th November 20x8. What was the year end of the company? 28 February 20x9. So basically, this was pre-year end, and there was a meeting between the engagement partner and the finance director. Who attended the meeting? Stella, the audit engagement partner, and Miss Anita Bay, the finance director of the Redback Sports company. That's not important. Let's get into the main thing. Redback Sports company operates 20 sport and leisure centers around the country. Each center has a large gym and a swimming pool, and many also have tennis and badminton courts. No problem with that. Given the nature of the company's operation, it has to comply with health and safety regulations by the national regulatory body, and its facilities are even inspected, and that is regularly, to ensure that all those health and safety regulations are being followed and for company to retain its operating license. Is there any business risk over here? I want you to come up with a heading. What heading you are going to make? What heading you are going to make? Well, I will make the heading from the question itself, and that is health and safety regulations. Remember, I asked you to come up with something and then explain. The company needs to comply with extraordinary or very strict laws and regulations, health and safety laws and regulations, and their facilities are inspected. So if they do not, or if they are found to, if they are not following the health and safety regulations, there could be serious implications for them. They could be fined, their reputation could go down, the customers are not going to trust them, the customers will stop visiting their premises. There could be, negative implications for the company. So that's how you are going to explain your first business risk. And the first heading is health and safety regulations. Here it is, health and safety regulation in the solution. I've skipped, I'm not following the past paper answers sequence. So health and safety regulations. Now this is the answer by the examination team for the 2 marks. How do you rate it? What, how do you rate it? Is it an attainable standard or an ideal standard? Very good, Cami Phillips. Reputational risk. Yes, Fazila, you will come up with a heading called health and safety regulations. And Akil has come up with a very good answer. Failure to comply with health and safety regulations will lead to withdrawal of the license. Very well done. And they might not be able to continue. There will be, reputational issues. The customers might not be, coming in. Very good, very good. Now the answer over here on your screen right now, I can't reproduce that same to same. I can't reproduce that. In fact, if I'm going to reproduce that, I won't be able to complete even 70-mark paper, let alone 100-mark paper. That's an ideal answer, but we can squeeze it a bit. But I'm not going to squeeze it in my own words. I can't trust my own English, right? Considering majority of us are having English as a second or sometimes second 22nd language rather than second. We can't trust our own language, so we will extract an answer out of it. The company operates in a highly regulated industry, and the risk of non-compliance with laws and regulations, various laws and regulations, or health and safety laws and regulation is high. That's a very nice and easy start. The company operates in a highly regulated industry. The key word is regulated industry. And the risk of non-compliance, that's another keyword. The sport and leisure industry has strict health and safety regulation which must be complied, and there are, okay, one can skip all that and one can straight away jump. There are regular health and safety inspections to ensure regulations are being adhered to. So you have identified the businesses from the question. You have got half mark, but you have to explain it. If the company is found not to be in compliance with the relevant regulations, its operating license could be revoked. The key word is revoked. The key word is revoked. That's the quality of writing. I was telling you one professional mark for the quality and clarity of wording. The key word is revoked. Some average answer will say, if they are not going to follow the laws and regulations, the authority will cancel or terminate their contract and they will be without the license. No, 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 no. Their license could be revoked. That's the clarity or quality of words, which could have reputational consequences and ultimately could impact on the company's going concern status. That's it. I will get 2 marks out of it. That's it. I'm done. You can simply ignore whatever they have written in addition to. You can simply ignore that. If you want to add something, you can say in addition to regular staff training on health and safety will be a costly activity as well, and that could lead to cash flow problems. Okay, fine. But their answer is too ideal. In addition to the risk of non-compliance, it will be costly to reduce the risk to an acceptable level. You can ignore that. For example, through regular staff training on health and safety, leading to cash flow and profit implications. You can ignore that. This is particularly important when it comes to scuba diving. You can ignore that. So my dear students, I was telling you earlier, these are ideal answers and we cannot and we should not replicate them, but we need to extract an answer out of it. So for the 2 marks, I will come up with a heading health and safety regulation, and I will start: the company operates in a highly regulatory environment and the risk of non-compliance is on the higher side. Considering the fact, I'm using my own words, spontaneously, considering the fact there are regular inspections, health and safety inspections, if the company is ever found to be in non-compliance with the laws and regulations, their license could be revoked, and as a result the company would face serious reputational issues or reputational consequences, and in the worst come scenario, they could have going concern problems. That's it. I'm done with 2 marks. Now, dear students, please tell me, is this a realistic answer? Can you reproduce that answer? Considering you are a triple A student, come on, you're a triple A student. Your writing skills has to be at least, up to that level. Yes, Fazila, we cannot rely on our own language. We have got limitations and we need to understand that. So we'll extract an answer out of it. The past papers, they are a turn off, but we can extract. The impact here is where, sir, going concern, there are two impacts. Akhil, there are two impacts. Number one, once the license is revoked, it is going to spread like a fire in the jungle, this news. And as a result, the reputational consequences, that's the first negative impact. Their reputation will go down. And in the worst come scenario, their going concern, they could be banned forever, right? So going concern is another impact. So this is 2 out of 2. Is it clear? Uh, Mikwet Nadeem, I'm unable to get your point. Eh, It's near to impossible. I didn't get it. Can we write that it will affect the operations as those might be stopped due to license? Yeah, it will affect the operations, but actually, once the operations are stopped, what happens? The customers are not going to trust your health and safety arrangements in the future. So your reputation will go down. Keep it simple. Due to reputational damage, so could lose customers, which in turn can affect the company's going concern if cash flow position. Yes, Amar, you're right. Okay, let's continue. So out of 4 business risks, we are done with 1. Let's continue. The company is not listed and therefore does not need to comply with local corporate governance regulations. However, the company's chief operating officer and chairman consider it good practice to have independent input to the board, and there are 2 non-executive directors. Okay, fine. One of the non-executive director is a leisure industry expert who was a chairman of a rival company for 10 years. The second non-executive director is an academic who specializes in organizational behavior and who has written several books on performance management in the sport and leisure industry. So they've got corporate governance regulations, but I'm unable to figure out uh, anything more, material in it. So let's continue with the question. The company's board has approved a plan to expand through acquiring other leisure and sport facility providers. The strategy is not likely to be implemented for another 2 years when the board would like the first acquisition to take place. However, potential target companies will be identified in the next 12 to 18 months. Ultimately, the board would like to seek a flotation of the company within the 5 years, and they consider that expanding the company would improve profits and make stock exchange listing more feasible. These things were part of the AA syllabus as well. Is there anyone who can extract a risk of material misstatement out of it? There is a risk of material misstatement over here. The management is looking forward to get stock exchange listing. They are trying to improve profitability. They are trying to, acquire companies in the next 12 to 18 months. What does all that tells you? Yes, Almas, thank you very much. The risk of manipulation, Manoj, well done. Yes, very well done. And finally, I've got a very good wording from Amar, management bias. Oh, Farah has come up with even better wording, earnings management. Very well done. Very well done. Let's explore what the solution has to offer. Okay, the first risk of material misstatement seems to be a very overwhelming one. Okay, before we go on to write on earnings management, before we go on to write on the window dressing, creative accounting, management bias, remember, keep that thing in mind. Always check out the financial data, because if there are chances of earnings management, if there are chances of manipulation, the revenue is likely to be overstated. The revenue is likely to be has gone up by a huge. Okay, let's check it out. The revenue has increased from 45 million to 53 million. Somebody please use the calculator that tell me the increase in percentage in revenue. And the profit before tax has gone up by almost 50%. Wow. Profit before tax. Sorry. Operating margin has gone up from 10.7% to 15%. What about the profit before tax? So you need to make few calculations that will support your answer. Okay, 20%, 17% revenue increase. Well done. Thank you for the help. Let's explore the solution now. The company has ambitious expansion plans. That's a key word. Marco is looking forward to that. And they are trying to get stock exchange listing within the next 5 years. This is all from the question itself. This can create significant pressure on management to report strong financial performance, and the risk of earning management is high. This can lead to range of inappropriate accounting treatment, including early recognition of revenue and deferred expenses. There is some indication of earning management. How? Because their revenue has increased by 17%, and their profit before tax has increased by 50%. This is an extraordinary increase. These trends indicates that income could be overstated and expenses could be understated. So you can squeeze that as well. You can come up with your own answer using the wordings by the examiner. The company has an ambitious expansion plans in the near future. Especially the company is looking forward to get stock exchange listing within the next 5 years. This creates extraordinary pressure on the management to come up with earning management. The chances of earning management is on the higher side. They might come up with inappropriate accounting treatments, especially with respect to the recognition of revenue. They might deferred expenses. Moreover, their revenue has gone up by 17% and their profit before tax has gone up by 15%, which indicates that the revenue could be overstated and the expenses could be understated. So that's how you can create a realistic answer on your own. Is this clear? Is this clear? So we are done with one risk of material misstatement. We are done with one risk of material misstatement, and we are done with one business risk. No, there was no business risk in that paragraph. Let's go back to the question. There was some business risk relevant to corporate governance, but I was unable to figure out anything. Let's continue. Redback Sports company has a small internal audit department with 2 staff who report to the finance director, as the board does not have an audit committee. Oh, now that corporate governance thing makes some sense. My dear student, please read this paragraph again. Read this first 2 sentences. The company is not listed, therefore does not comply with local corporate governance regulations. However, the company's chief operating officer and chairman consider it good practice to have independent input to the board, and there are 2 non-executive directors. Now read this. Redback Sports Company has a small internal audit department with 2 staff who report directly to whom? In AA, we studied that the internal audit department should not be reporting directly to the finance director. They should be reporting to the audit committee, and there is no audit committee. Is there any business risk now? Is there any business risk now? Thank you, Zishan. Very well done. The poor corporate governance structure. Yes, thank you, Farah. The poor corporate governance structure reveals one thing, that the financial controls would be poor as well. The internal controls would be poor as well. The financial controls relevant to the processing of financial statements would be poor. Overall, the control systems would be poor. And as a result, the risk of frauds and errors are on the higher side. Ayaz is saying due to lack of corporate governance, control risk is on the higher side, which leads to a higher risk of material misstatement. So that leads to a risk of material misstatement as well, and that could be a business risk as well, because once the controls are poor, once the controls are poor, the company might not be able to achieve their objectives. So this point will have 2 sides of it. We can transform that point into a business risk and uh, into a risk of material misstatement as well. So now back to the business risk. The company does not have to comply with corporate governance requirement, as it is not a listed entity. And it is good to note that the board includes 2 non-executive directors who seem to able to offer independent views on strategy and management. So you can copy all that from the question. The company does not have to comply with corporate governance requirement. It is not a listed entity, but they still have got 2 non-executive directors. Okay, fine, full stop. Let's skim a bit. However, the company lacks an audit committee, and their audit team is small and lacking independence, as they report directly to the finance director. This means the scope of their work is likely to be quite limited due to insufficient resources, and any recommendation made could potentially be ignored by the finance director. Overall, this could lead to deficiencies in controls and inefficiencies in the business operations. That's it. What's the negative impact? Deficiencies in the controls and inefficiencies in the business operations, and the company won't be able to achieve their objectives. That's it. You can skip the in addition. In addition, given the company is looking to achieve the listing, they need to comply, you can skip all that. So let me repeat all that for you. The company does not have to follow the corporate governance regulation because the company is not listed as of now, but the company is looking forward to get listing in the near future, so they should follow corporate governance best practices from now. Considering they've got a very small internal audit department which is directly reporting to the finance director, and they do not have audit committee, I think the scope of the internal audit department is likely to be very low. The overall controls deficiencies would be on the higher side, and leading to inefficiencies in the business operations, leading to business risk. What could be the risk of material misstatement out of it? As discussed in the previous section, the company lacks an audit committee and only has a small internal audit team which is not operating independently. This has implications for controls over the financial reporting, which could be deficient, and increases control risk. As Farah and Zishan, all of you mentioned, this leads to higher control risk. Considering there is a higher control risk, there is a high scope for errors in the financial reporting process. What's the key word? Financial reporting process. And for deliberate manipulation of balances. As a result, the financial statements could be materially misstated. Which financial statement item? Not a particular one. Overall, the financial statements could be materially misstated because the control risk is high, and when the control risk is high, the risk of material misstatement is automatically high. Is this clear how you can use this corporate governance deficiencies into a business risk, because the business won't be able to achieve their objectives? And considering there are weak controls, there will be a higher risk, control risk, and there will be a higher risk of material misstatement. Are you clear with another business risk and another risk of material misstatement? Sir, will you get 2 marks here, isn't it? Yes, you'll get 2 marks. Yes, Fazila, you'll get 2 marks because you are not utilizing materiality over here. You'll get 2 marks. Any suggestions regarding the financials that will be recommended by the internal audit department will be ignored by the finance director, that limits, or that uh, you know compromises the internal audit department. Yes, you are, Simran, absolutely right. Even if the company is not listed, do we need an audit committee? It's not mandatory, but it's a best practice, and they are looking forward to expansion, and they are looking forward to the stock exchange listing. So why not? Okay, let's go back to the question. The company offers a membership scheme whereby for an annual subscription, members can use the facilities at any of the centers. Customers who are not members can pay to access a center for a day under the company's pay-as-you-go plan. The membership scheme accounts for approximately 85% of the company's revenue, with the remaining revenue resulting from pay-as-you-go sales. Is there any risk of material misstatement over here, especially with respect to membership revenue? I've just given you a hint. I want you to answer my question. How do members pay? How do members pay? In your city, there has to be some club, some gym, some sports facility, some, how do members pay? Usually they pay on an annual basis, right? So how the the club is supposed to recognize the revenue? So if you have paid in this one, am I supposed to recognize the whole revenue immediately? Yes, you are absolutely right, all of you. Very well done. Uh, Incorrect revenue recognition, Fazila. Early recognition of revenue, Farah, you're right. Uh, Very well done. Revenue recognition, yes, cut off. Well done, well done, very well done. So which financial statement item are we talking about? Revenue could be overstated, and the liabilities, current liabilities, could be understated. So which financial statement item? Revenue and liabilities, understated and overstated. Why? Because according to IFRS 15, revenue should be recognized. Revenue should be recognized along with the, when the period of membership, along with the once you when the services will be performed. So there is a risk that the timing of the revenue recognition is not appropriate. Maybe maybe the company, there is a risk that company has recognized the revenue, although the recognition criteria is not fulfilled. So let's explore the solution. With 85% of revenue from being members subscription, there is a risk that revenue is recognized incorrectly. Revenue at the year end could be overstated, and the current liabilities could be understated. Why? Because there is a risk that the timing of revenue recognition is not appropriate. There are multiple revenue streams, which complicates the financial reporting process and increases the risk. As well as members paying an annual subscription, customers can pay for access under pay-as-you-go scheme. You can skip the pay-as-you-go scheme. In addition, the free it is possible that system is not recording the free access provided. Okay, let's squeeze it a bit. With 85% of revenue being from members subscription, there is a risk that revenue is recognized incorrectly. There is a risk that the timing of revenue recognition is not appropriate. For example, if an annual membership recognized in full when it is received by the company rather than recognized over the period of membership, thereby overstating the revenue. Moreover, there are multiple revenue streams, which complicates the financial reporting process and increases the risk. I'm done. I'm getting full marks here. Don't discuss that there are pay-as-you-go scheme as well, and there this and there is that. Let's recap. 85% of revenue is derived from the member subscription. There is a risk that revenue is recognized incorrectly. For example, a customer has paid for 1 year, they have not received the service for the whole year, but the revenue is recognized fully in the year. As a result, the year-end revenue would be overstated. Is this clear? Can you squeeze it a bit? Can you pre-produce an ideal answer out of it? With 85% of revenue being from members subscriptions, there is a risk that revenue is recognized incorrectly. What's the risk? There is a risk that the timing of the revenue recognition is not appropriate. For example, if a member has paid in full and the company has received the cash, maybe the company has recognized the revenue rather than being recognized over the period of time, and as a result the year end revenue would be overstated. If you want to add something, you can add this one sentence: considering there are other multiple streams of revenue, the chances of, you know, in this complicates the financial reporting process and increases the risk as well. Is this clear? Another risk of material misstatement. Well done, well done. So that was the third risk of material misstatement. First, number one was about the management bias. The number second was about the corporate governance. Number third, and corporate governance and leading to poor internal controls. Number third, revenue recognition. And as of now, we have covered two business risks. Number one, health and safety regulations, and the corporate governance, poor corporate governance structure. Okay, business developments in the year. The industry is a very competitive one, and the company's strategy is to encourage customers to renew their membership and to attract new members by offering range of new activities. Okay, fine. According to the finance director, a successful initiative which started in March is Healthy Kids campaign. This offers children 2 hours of coaching per week in a range of sports, including swimming and tennis. The coaching is provided free as part of their parents membership. So if you guys are having the membership as parents, your children and your kids are for free. And it has proved to be very successful. What does that mean? It has proved to be very successful means that there is likely to be overcrowded sports and leisure centers. The finance director estimates that it has led to 3,000 new members since it was launched. Now, dear students, you have to connect few pieces of puzzles. You have to connect few pieces of puzzles. There are 85% revenue from the subscribers, right? But the rest of the revenue, there is another thing called pay as you go. So there are certain customers who are coming in without having any subscription, and they pay and they enter. Now there is a healthy kids campaign program, and as a result there will be more members, and there are free hours for the sport for the children as well. All those factors are, making me realize that the sports and leisure facilities could be overcrowded. But okay, fine, no, don't attempt that, because I can see there are few more free hours available here. Redback Sports company is also involved with a government initiative to help unemployed people have access to sports facilities. So those unemployed people will have access to sports facilities. The company received a grant of 2 million. Okay, fine, grant in September 2008, under the terms of which it allows unemployed people 3 hours of another free access to its facilities per month. By the end of November, 33,900 free hours of facility use have been provided under this scheme. The government intends the initiative to run for 3 years to promote long-term health of participants. So, can you combine all those health and healthy kids campaign and the government's initiative for the unemployed people, and can you come up with a business risk? Can you guys come up with a business risk? Nashir, not over trading. Over trading is not the right word over here. Okay, so Akhil has asked, what is the idea behind overcrowding? Okay, see, these are leisure sports gym and facilities. The subscribers, the members would hate it if these places are overcrowded. Please imagine a 7-star or even a 5-star hotel and a restaurant. Are these overcrowded? If they are overcrowded, what's the difference between a 5-star, 7-star and a street hotel? So if they are overcrowded, the customers will hate it. The quality of service will go down. The noise pollution is going to be on the higher side. The customers are not going to love it. So this is the business risk. Please read this. There could be problems facing the company in terms of capacity of its facilities. Members has increased significantly during the year by 12.4%, and the number of pay-as-you-go visits has increased by 5.3%. You can get this calculation from these accounts. Number of members has increased from 33,800 to 38,000. Number of pay-as-you-go entry tickets has gone up from 102,600 to 108. Along with that, health and safe healthy kids program has also increased, and along with that, the free the free the access to the unemployed people. This may deter members from renewing their membership, and as you pay go customers might prefer to other sport and leisure providers if overcrowding becomes problematic. So how are you going to structure your answer? You will say the members have gone up by 12.4%. Pay as you go visits have gone up by 5.3%. Moreover, because of healthy kids program and because of the government's initiative of unemployed people, there is a huge possibility that the overall sports and leisure facilities become overcrowded, and the company might be facing capacity issues, and these overcrowding becomes problematic, and as a result the members might not be willing to renew their contracts, and this would lead to serious concerns over the future revenue, or over the revenue or the survival of the sports and leisure center. So that's how you are going to create your answer, and you will get more than 2 marks because you are going to calculate certain calculations as well. Okay, let's go back to the question. Okay, when we started this business developments in the year, the industry is a competitive one. Is there any risk over here? The industry is competitive. Is there any risk over here? Is there any risk? The industry is competitive. Whenever examiner says the industry is a competitive one, it is a business risk. The industry is competitive, which itself is a business risk, meaning there is a pressure on the company to maintain its market share and customer base. They need to maintain their customer base. They need to come up with new offers. They need to make sure their prices are not that high, and that will impact on their profit margins and cash flows. They need to spend on maintaining. They need to maintain their image. They need to invest on marketing. So this itself is a business risk. If they are not going to do that, they will lose the market share, because it's a competitive industry in which they operate. So this is another business risk. If you want to add something, this year they have spent 8.5 million on marketing, which is 16% of revenue. So this could be a huge cash drainage. This could lead to cash flow problems. So this is another business risk. The company operates in a highly competitive environment, which is a business risk. They need to invest on marketing. They need to invest on certain things. They need to maintain their prices, which could compromise their profitability, which could compromise their cash flows. Are you clear with this business risk? Okay. What about that government grant? What about that government grant? IAS 20 government grant. Is there anyone who knows how are we going to recognize that government grant? Yes, Farah, you can get maximum 3 marks for the calculation of trends and ratios, but half mark for one, so you can calculate, no problem. Yes, there is another risk of material misstatement regarding the government grant. And how is that? Because the company received a grant of 2 million, which they have recognized as their income. Now you need to calculate the materiality of this grant, this 2 million. How are you going to calculate the materiality? 2 million. And you can calculate 2 million represents how much of the 6.9 million. So you can calculate the materiality with respect to their profit, and you can calculate the materiality with respect to revenue. So you can calculate with respect to assets. So the company has received 2 million grant this year, which has been recognized as other operating income. This amount represents 29% of the projected profit before tax. The risk of material misstatement relates to whether this should all have been recognized as income in the correct accounting period. Well, what does IS 20 says? The IS 20 says that Redback company should have recognized uh, this in, once they meet the criteria, rather than fully recognizing it as an income. Let's see what IS 20 accounting for government grant and disclosure of government assistance requires the government grants are recognized in profit or loss on a systematic basis. What's the key word? Systematic basis over the period in which the entity recognizes expense for the related cost. So therefore, the company's income is overstated, and they should have recognized it as a liability, as a deferred income. So their profit is overstated and their liabilities are understated. So how are you going to structure your answer? You are going to say the company received a grant of 2 million this year, which is for a 3-year period, but the company has recognized it as full in the current year's operating income. As a result, their profit is overstated and their liabilities are understated, because according to IS 20, what's the correct accounting standard says, what the accounting standard says, they should have recognized it on a systematic basis over the period of time in to which the grant relates. So their revenue is overstated, their profit is overstated, and their liabilities are understated. Is this clear? You are going to get 3 marks out of it. Now, when it comes to ideal answers, they have explained another thing. What if the client does not meet the criteria? What if they breach the certain criteria, so they have to repay the certain amount of grant? So they have explained the accounting treatment of IS 37 as well. They might have to recognize a provision, or they might have to disclose a contingent liability. But a normal answer will not reflect this. So you can get 3 marks by having the calculation of materiality. You need to discuss the IS 20, what systematic basis is. You need to come up that the profit is overstated, the liabilities are understated. You can get the full 3 marks. So you have to ignore all that and you can still get 3 marks. Is this clear? Are you clear with the 3 marks? How are you going to get 3 marks out of the risk of material misstatement? Which financial statement item? The current liabilities are understated, the profit is overstated. What's the materiality? It represents 29% of the profit before tax, so it's definitely material for the profit and loss account. What does IS 20 says? You need to recognize the income on a systematic basis over the period in which the entity recognizes the expense to which it relates. So the client has made the client has incorrectly recognized it as full. Are you clear with the ingredients? Are you clear with the 3 marks? No, Majabin, IS 37 risk will be from the same story, so you won't get different marks for that. Grant terms can be the business risk. Yes, if they do not follow the grant terms and condition, and if the government is going to ask for the repayment of the fine, they might fine. If they are not going to report to the government appropriately, because government has given the grant, government, yes, if you can explain another. Okay, if you are going to uh, one for recognition, one for grant terms. Yes, if you are not going to follow the grant terms and conditions, there is a possibility you might have to repay the grant, and in that case you have to recognize a provision, or you might have to come up with a disclosure. So that's how you can explain the IS 37. But if you want to move on, the 3 marks out of the grant are good enough and you can move on. Yes, The risk seems to be too detailed for 3 marks. Yes, it seems to be too detailed. That's why you can skip the risk of material. You can skip the IS 37 part. Wait, let's see what the marking scheme has to offer. Management bias 2 marks, deficiencies 2 marks, revenue recognition 2 marks, government grants, risk income recognized too early and provision is not recognized. So there are 3 marks for that. There are not different 3 marks for the grant income recognized too early and 3 marks for the provision, not at all. So why I can simply ignore the provision point, or if I have to add, I can make it very simple. If the company is failed to follow the grant terms and condition, they might have to repay the grant, and in that case the provision could be understated if somebody wants to add. Otherwise I can complete my 3 marks by simply focusing on IAS 20. I can simply ignore the provision. Are you clear now? The provisions relevant regarding the grant are not having separate marks in the marking scheme. Thank you, Motar. Well done. Don't. Why should we attempt everything? Once we have got the 3 marks, we should move on to the next point. Okay, how much we are left with? Okay, yes, in June 20X8, the company opened a new coastal sport and leisure center, which, as well as offering the usual facilities, also has a scuba diving center and offers other water sport facilities. An investment of 12 million was also made in gym equipment across all center to ensure the company offers the most modern facilities to its customer. So the company has invested 12 million in new gym equipment services. That has got to do with AA. There is a risk that the classification or the split between the capital expenditure and revenue expenditure could be wrong, and as a result this is another risk of material. This could lead to another risk of material misstatement. Okay, they have not explained this point. Let's move on. An advertising campaign has been launched to promote the company brand generally and to make customers aware of the investment in the facilities which have been made. As part of this campaign, the company already paid 1 million to a famous athlete to endorse the company for a period of 2 years. So they paid 1 million to an athlete for a period of 2 years. The athlete will appear at the opening of the new Coastal Sports Center and has agreed to feature in the poster advertisement for the next 2 years. What's the audit risk here? What's the risk of material misstatement here? Anyone? Yes, yes, there is a temptation to write more than the necessary in AAA. Absolutely right. You have nailed it. Candy, you have nailed it. Exactly. That's what leads us to overwriting. That's what leads us to not being able to finish off the paper. In fact, initially that leads us to depressed life, demotivation, not preparing at all because we believe we can't, we are unable to do that. The expense has been written off in full in the current accounting period. Yes, Ayaz, you are right. There is a risk that they have recognized the expense fully in the correct in the current accounting period. Ali Akbar is saying there is a risk that expense shall be recognized in the current year. As a result, profits will be understated. Yes, they need to recognize. They should not write it off in full. You are absolutely right. No, brand has to be reviewed for impairment. No, 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 not at all, Nashir, not at all. Risk of recording the whole 2 million in this year, hence overstate or expense. Sidra, you are right, but the amount you have referred is not correct. It's not 2 million, it's 1 million. Okay, let's see what the solution has to offer. Fee paid to celebrity athlete. The 1 million paid to celebrity athlete. You definitely need to calculate the materiality. And considering they have recognized, you need to calculate with respect to profit. The 1 million paid to celebrity athlete is material representing 14.4% of the profit. Given that athlete is providing the service for the company for 2 years, this should be recognized over the period of 2 years with an element of the cost deferred until the next year. If all of the, if I don't know, I'm not sure. Remember at the start of the session, I told you there could be a risk, or there, yeah, I told you sometimes the financial statements would be materially misstated and sometimes there is a risk. Now what, check out the wording. If all of the expense has been recognized this year, profit is understated and assets are understated. Because I'm not sure, so I'm expressing the risk. That's too simple. You can get 3 marks out of it. You can get 3 marks. Why? How 3 marks? Which financial statement item? Profit and assets. The profits will be understated and the assets will be understated as well. How? Another mark by discussing the materiality, 14.4%, which is clearly material for the statement of profit or loss account. What's the accounting treatment? You need to recognize it over the period of 2 years rather than in full in the current accounting period. There is a risk they have recognized in full in the current year. They have charged it as an expense. Are you clear with these 3 marks? Can I have confirmation? Are you clear? Fazila, you should have recognized it as a current asset, prepayment, kind of an asset. You have paid to them, but you are yet to receive the service. Are you clear with these 3 marks, everyone? Muattar is clear, Nashir, Ayaz, Farah, Akil. Great, fantastic. Okay, Umar, thank you. Let's see. Okay, we are already done with the grant. A new data management system has been introduced which integrates management information with the accounting software. So that management system is integrated with accounting software. This allows more efficient management of customer database, which is used extensively for marketing purpose, as well as providing more timely information on the financial performance to management. Data from the previous system was transferred to the new system during the year in July 2008, and the two systems ran in parallel for 2 months while training was given to staff and the new system was monitored. One feature of the new system is that it records and reports on the free hours of access provided to unemployed people, which the company has to report on a monthly basis to the government. Oh, there is one definite risk of material misstatement, and that is, what if during the transfer of the data, the transferred process was not well controlled? What if? What if the introduction of the new system creates a risk of material misstatements? Errors could have been made when the data was transferred from the old system to the new system. And as a result, the revenue and the expenses could be misstated because that new management system is directly linked with the finance system. Moreover, the staff might not be well trained, and as a result, they might commit errors, and the risk of frauds could be on the higher side. Are you clear with the 2 marks? Can I have confirmation? Are you clear with the 2 marks? Don't say about the opening balances. It's not about the opening balances, it's about the transferring of data. Are you clear with the 2 marks? Let me repeat it for you. The, the management has introduced a new management information system during the year. There is a risk that when the data was transferred from the old system to the new system, there would have been poor controls, and as a result there could be material misstatements during the transferring of data. Moreover, the staff might not be well trained, and as a result they might commit errors or they might commit frauds, and as a result again the financial statements could be materially misstated. Isabel is saying, I am absolutely clear with 2 marks. Very well done. Yes, Ali Akbar, fantastic. There is a risk that staff may not have been appropriately trained to operate the system, and as a result, data management system might not give the desired results. Wow, well done. Oh, now another very important business risk. Farah is saying, because of this new management information system, there is a possibility we might not be reporting correct data to the government, and as a result the government will eventually realize it, and they will come up with a very strict and an aggressive stance, and they might, revoke the contract. Yes, this leads to a business risk. We might have to pay off the grant immediately because we have been falsely reporting them. We have been reporting false data to them, and this could lead to cash flow problems. A beautiful business risk compiled by you guys. Very well done. Yes, Akhil, the man, this could be transformed into a business risk as well, especially with the government involvement. Well done. Let's see. Read it out. Introducing a new data management system can create a business risk, considering there was insufficient training, the controls might be poor, leading to inaccurate recording, processing, and reporting of information. The government will not be happy, and as a result, the government will come up with, strict stance. They might ask you to repay, which leads to cash flow problems. So another 2 marks for the business risk with respect to this new management system. Okay, I'm done with all this information. Once you are done with all the story, you need to look at the management account system. You need to look for the over trading. You need to look for the cash flow problems. See, their borrowing has increased from 20 million to 32. Their cash has gone down from 5.6 to 1.4. Their revenue has gone up by 17%. Their profit has gone up. All that suggests over trading. So over trading and cash flow problems, you have to create this as a business risk, and you can, let's see if this is, yes, liquidity and over trading. The company's cash position has gone bad from 5.6 million to 1.4. At the same time, their revenue has gone up by 17%. Their profit before tax has gone up by 50%. If you incorporate all those factors, if you amalgamate all those factors, this reveals that the company is facing liquidity problems or cash flow problems, and if those problems are not well managed, this could lead to going concern problems as well. So this is another business risk. Okay, now is there anything left? Oh, there is some more information, then we'll be done with this question. Hold on. So capital expenditure was mostly financed through borrowings. On 1st March 2008, a 10-year 30 million loan was received from the company's bank. The loan does not bear interest, so it's a deep discount and is repayable at par value of 34 million. Is there any risk over here? So the company has acquired a loan of 30 million and they have to repay for 34 million. There is no interest. But what does the accounting standard say about it? The accounting standard, which accounting standard? No, it's not about IS 23. IS 23 is about the borrowing cost. It's about the IFRS 9. Yes, Manoj Kumar, absolutely perfect. What does IFRS 9 says? During the year, the company took a loan of 30 million. This represents 23.1% of total assets. So you got 1 mark with using the materiality and discussing it, which financial statement the loan has been issued at a deep discount, and there is a risk of material misstatement that the finance costs associated with this loan may not be accounted for in accordance with IFRS 9. Dear students, IFRS 9 says that even if you have acquired 30 million, and at the end of the day, after certain years, you have to pay 34 million, you should recognize the finance cost over the period of time. There is a risk that the finance cost is understated and the non-current liability is also understated if the appropriate accounting treatment of the IFRS 9 is not followed. The client should have amortized this loan over the period. They should recognize the finance cost. Are you clear what this IFRS 9 says? What's the risk here? The finance cost is understated. What's the risk? They have not recognized the finance cost over the period of time. Read the solution. IFRS 9 requires that the finance cost associated with deep discount, in this case, which is 4 million, should be recognized, received by the sports company, and the amount repaid on the amount should be amortized over the period of the loan. There is a risk that finance costs and the non-current liabilities will be understated if the appropriate finance cost is not accrued in this financial year. So you can simply ask, you can simply squeeze it. You can simply say that according to IFRS 9, they should recognize it over the period of time. There is a risk they haven't, so the liabilities could be understated. Are you clear with this point? Last point. Moreover, as well as the bank loan, a loan of 1 million was advanced to the company from its managing director, whose managing director's name is Bob, in during the year. The terms of this loan includes 3% interest paid to Bob annually in arrears, and the capital will be repaid in 7 years time in 20x5. Now this 3% might not be material when it comes to monetary terms. You are going to calculate the 3% of the 1 million, and then you are going to check it with respect to revenue or with respect to profit. But this is a related party transaction, so it is material by nature. There is a risk that the client has not fully disclosed this, and in accordance to IS 24, considering it's a transaction with a key management personnel, they need to fully disclose this transaction. So even if it is not material in with respect to monetary terms, they should fully disclose it. There is a risk that the disclosure is not there or appropriate disclosure is not there. So this is another risk of material misstatement. Moreover, they should recognize that 3%, and they should time apportion it, and they should recognize it as a finance cost as well. Please read the solution. The managing director of Redback Sports company made a loan of 1 million. This is not material when it comes to monetary terms because it represents just 0.8% of total assets, but it is material by nature. According to IS 24, any transaction with the key management should be fully disclosed. There is a risk that disclosure is not there or the disclosure is not appropriate. So this is how you are going to get 3 marks out of it. Even if you are going to skip this interest part, you will still able to get 3 marks. Are you clear with the IFRS 19 and S24? Yes, Simran, you are absolutely right. Proper disclosure is not given or the disclosure is not there at all. So which accounting standards we have discussed today? IS 24, IFRS 9, IFRS 15 revenue recognition, IS 20 government grant, IS 37 provision contingent liabilities, and that's it. So an ideal student will revise these accounting standards, at least the summaries of it. An ideal student will extract the sentences relevant to these accounting standard and make his or her separate notes on IAS and IFRS. Any sentence relevant to IFRS 15, any sentence relevant to IFRS 19, any sentence relevant to IS 20 government grant, any sentence relevant to IS 27, extract from this answer and make your own notes. So I'm done with these 2 questions. The part A relevant to the business risk, the part B relevant to the risk of material misstatement. Let's quickly discuss the risk. Let's quickly discuss the part C as well, which was about what? Design the principal procedures to be used in the audit of government grant. 6 marks, 6 procedures. First of all, you should inspect and review the grant document, and you should try to understand the terms and conditions, the amount, and the timing of the grant, and all those terms and conditions. Try to understand what the terms and conditions are, what was the amount. So all that stuff you should understand from the grant document. So that should be your first procedure. You should not only rely on the grant document, you should inspect the bank statement and cash day book. You should inspect the bank statement and cash day book in order to verify whether the client has actually received the same amount as grant. So that should be your second procedure. Then what? You should try to understand whether the client would be able to meet the terms and conditions associated with the grant. If that is the case, it's okay. If that is not the case, there has to be some kind of disclosure or a provision which needs to be recognized, and you need to have discussion on the management. You can simply recalculate the accounting treatment of the grant by recalculate the government grant calculation, make sure they have correctly recognized it with respect to the 3-year period. Last but not the least, you can review the disclosures relevant to grant, make sure they are in line with IAS 20 government grant. So recalculate the amount which should have been recognized according to the 3-year period. agree the amount of cash from the bank statement and cash day book, review the terms and conditions in order to understand whether the company will be able to meet the, the 3-year period, obtain the grant document in order to understand what was the, three things that what in order to confirm the amount, the date, the terms and conditions. You can even review the client's forecasts and budgets in order to verify whether they will be able to meet the terms and conditions of the grant. Otherwise, the grant will be repayable. You can have a discussion with the management regarding their policy and regarding their plans, whether they will be able to meet the terms and conditions of the grant. Make sure their assumptions and their logics are rational. Is this clear? So I'm done with this question, and I'm done with the meanwhile. If you have got any questions, please raise your questions. Please raise your questions, and don't forget, this is my number and you can contact me for any confusion. And don't forget, tomorrow we'll be discussing what? Tomorrow we'll be discussing ethical issues, professional issues, most importantly, a very, very, very tricky topic, and you will find this in your upcoming exam, which is called quality control. So we'll be discussing two syllabus areas tomorrow: ethical and professional issues and quality control. So that's the agenda for tomorrow, same time. Meanwhile, if you have got questions, I'm happy to answer. Sir, what is the idea? What is the idea or reason behind obtaining a management representation? Management representations are only sought, they are only obtained when there are no other reliable audit evidence. So you have to rely on the management representation. You will ask the management to write it for you. So in this case, there are many other ways through which you will be able to verify whether the grant has been correctly accounted for. So you don't have to seek the management representation. Thank you very much, Kemi, for your kind words. Thank you. Okay, Ammar has asked a very important question. While in the exam, should we read the full scenario along with the exhibits first or start writing answers as we go? I swear you should start your answer straight away. You identify a particular business risk or a risk of material statement. If you ever need to amend it, you can amend it. Yeah, you can amend it with the help of, after all, you are typing it. Do not read the full question. Read the first sentence. If you are able to figure out any businesses, straight away attempt it. You don't have time to read the question twice. Are you all clear with this, with respect to this Ammar's question and my answer? Sidra has asked to highlight important technical articles. Sidra, at the end of the 4th day, I will share 5 exam articles in the WhatsApp group. Don't worry. 5 articles, and they will cover almost the entire syllabus. Almost. Most welcome. How plant might be impaired if there is a reduction in sales? Okay, let's imagine I've got a very special machine exclusively in order to make a particular product. If the sales of that product will go down, what I'm going to do with that machine? What's impairment? Impairment means the recoverable amount is greater than the carrying value. What's the recoverable amount? The fair value less cost to sell and the value in use, the higher of the two. The value in use has gone down. You might not be able to sell it off with a great price. So the recoverable amount will be lower as compared to the carrying value. As a result, you need to charge the impairment. So because of the sales going down, if there is an indication that the sales are going down, the associated plant and machinery will be impaired. Is this clear? What's the relationship between sales going down and the impairment expense? Thank you very much, Sidra, for your kind words. Thank you. We'll keep this energy for uh, throughout the period, day 2, day 3, and day 4. Day 4 is going to be a very hectic day, because we'll be covering non-audit or audit-related services. Most welcome, Umar. Please replicate that, practice that. Don't panic. Don't be over ambitious. You'll make it. Hence, impairment should be tested. Yes, if the sales are going down, there is a huge chances that the non-current assets or the associated machinery will be impaired. Yes, if this is a new audit client and the opening balances were definitely were audited by a different client, this leads to a detection risk. Yes, there is a need for conclusion. Yes, there is a need for conclusion. Wait. Conclusion is not a big deal. The evaluation in relation to Redback Sports Company indicates that company faces a variety or a range of business risk. For example, they are facing over trading and liquidity problems which needs to be managed. There are a number of significant audit risks which will impact our audit planning. For example, the accounting treatment which has been applied to government grant, and so there is a significant risk of management bias. This is the conclusion of the parts we have attempted so far. We have not attempted the part C and D, so I'm not going towards that. There is a significant risk of management bias. That's it. That's the conclusion. Any other question from anyone? Sir, in the next 4 days, can you just allocate 10 minutes to help us understand the audit side of IS 19? Oh, that will be a very difficult task. IS 19, what is it? Employee benefit. Okay, I'll try. Can you tell the effect of listed and non-listed companies in respect of AAA? Don't worry, that's not a major problem. Listed companies or non-listed companies, the listed companies and non-listed companies have implications with respect to ethical issues. So we'll discuss that tomorrow, Mohtar. So do we have time to start revision? Well, absolutely yes. Attend these 4 days of webinar and then allocate 8 days to 8 different past papers according to my technique. That's prepare, which I'll be highlighting all over again, maybe tomorrow, otherwise definitely on the 4th day. Because I've seen answers highlighting listed and non-listed companies again and again. Well, that's about ethical issues. Yes, they can test any accounting standard. Okay, most welcome, most welcome. Thank you very much. I'll see you tomorrow, same time. A very important tip from my side before joining for the tomorrow's session, prepare this question called Redback Sports Company. And when I say prepare, you have to type the answers on the ACCA practice platform. This is from December to this question from December 2018. So it is one of the paper which I've recommended, the 8 past papers. So type and learn this question. Tomorrow, when you should come for this class, you should have prepared this. How are you going to prepare it? You should try to attempt your answer first of all. Then you should extract answers from the past paper solution. Then you should type those answers. You should learn those answers. You should learn those answers. And then you should read the examiner report as well. So Athena is saying, I don't see December 2018 paper on practice platform. No worries. You can allocate that paper to yourself. Otherwise, you can split the screen, open the paper in the PDF form. No worries. You can allocate that paper to yourself. Thank you very much, everyone. I'll see you tomorrow. And I'm assuming and I'm hoping that tomorrow when we'll start the class, I will start the class with this question. Have you prepared the full 50-mark question called Redback Sports Company? Have you prepared? I will say, have you prepared? And when I say prepare, it means you need to invest almost 4 to 5 hours alone on this one question. This is from December 2018. Yes, it is one of the past exam paper which I recommended, and it is one of the exam past paper available on accglobal.com. Thank you very much. I'll see you tomorrow. Thank you for your kind words. I really appreciate that. It means a lot to me. Bye-bye.